Yes, students. Now we will discuss the questions on total income and tax liability calculations from ICAI material. That is chapter 9. Yes, we'll do one by one. Good number of questions are there. One by one we will cover. Question number 1. Compute the tax liability of Mr. Gupta, aged 61 years. Guys, whenever age is given, somewhere it will play a role in your answer. Please be careful. Under a default tax regime, having total income of 1 crore 2 lakh, whenever you see this figure, one thing should strike to you. What is it? Surcharge. And when you are applying surcharge, another thing has to strike to you. What is it? Marginal relief. Because, sir, my total income, not mine, Mr. Gupta's. Okay. Mr. Gupta's total income has crossed 1 crore. That means surcharge is applicable at what rate? 15%. Is it crossed by a small margin or bigger margin? Smaller margin. We call it as marginal amount. Clear? So, should we check marginal relief? Yes. For the assessment year 25-26, assume that its total income comprises of salary income, income from house property, and interest on FD. That means entire total income is a normal income. No special income. You need to apply straight away slab rate. Under which scheme? Default scheme. Up to 3 lakh nil. So then from there on, it is continuing. Clear? Yes, sir. Check. Let us see the answer. First, let us calculate the tax liability. Step 1, guys. Computation of tax liability of Mr. Gupta for his total income 1 to 2 lakh. Up to 3 lakh nil, they have not shown that step here. Up to 3 lakh nil, better to show it there. Okay, if not here, at least do it by way of working note. Up to 3 lakh nil, basic exemption limit. Then 3 lakh to 7 lakh, 5%, which comes to 4 lakh into 5%, 20,000. Then 7 lakh to 10 lakh, it is 10%. The difference between upper limit and lower limit is 3 lakh into 10%, which comes to 30,000. Next, 10 lakh to 12 lakh to 15%. The difference between upper limit and lower limit is 2 lakh. So 2 lakh into 15% comes to 30,000. Then 12 to 15 lakh, the tax rate is 20%. The difference between upper limit and lower limit is 3 lakh. 3 lakh into 20% comes to 60,000. Okay. In excess of 15 lakh, the tax rate is 30%. Yes, sir. How much is there? More than 15 lakh, up to how much? Total income of 1 crore 2 lakh. So what you do is 1 crore 2 lakh minus 15 lakh into 30%, which comes to 26 lakh 10,000. Okay, sir. So what is this gross tax liability? 27 lakh 50,000. For that, should we add surcharge? Yes. As the total income is more than 1 crore but up to 2 crore, you have to add a surcharge at the rate of 15%. So which comes to 27 lakh 50,000. Better you show like this in the bracket, okay? 27 lakh 50,000 into 15% comes to 4 lakh 12,500. So you will get the tax including surcharge this month. Cess don't add it here. Cess will come later. This is first steps. This is our regular calculation. Whenever we have a doubt that marginal relief might be available, we need to apply second step. What is that? We need to calculate tax on the limit which we have crossed. What is the limit the assessee has crossed? 1 crore. Calculate tax on 1 crore. Calculate tax on 1 crore. Same way, guys, this last step will change. That's all. Clear? Sir, can I simply write same as above? Don't write like that. Please calculate in your exam by way of working note. Yes, same calculation, but here instead of 1 crore 2 lakh, it would be 1. Clear? This step and all will remain same to same. Okay, sir. So they have taken 1 lakh 40,000 plus 25 lakh 50,000. Sir, how did they derive it? Simple, guys. They have added all this. This will give you 1 lakh 40. Correct? 60, 60, 120 plus 20. 140. Plus last step, you don't take the same figure. It would be like 1 crore minus 15 lakh into 30%. Okay. That will give you 25 lakh 50,000. So this is gross tax on 1 crore. Clear? Now, if your total income is exactly 1 crore, is surcharge applicable? Yes. More than 50 lakh up to 1 crore, how much is that? 10%. I had given in my material, if the total income crosses the second or higher limit. Clear? 50 lakh if it crosses, in the second step, surcharge will not come. But if it crosses 1 crore, 2 crore and all, will surcharge come in the second step? Yes. How much, sir? 10%. Because if your total income is exactly 1 crore, surcharge would not be 15%. It is 10%. That is more than 50 lakh up to 1 crore. Okay, sir. We will take 10%. 10% on what? Whatever tax you have got here. Okay, sir. We derive this figure. Then total income in excess of 1 crore, how much is there? 1 crore 2 lakh minus 1 crore. Why 1 crore, sir? Because we have calculated tax on that year. Okay, so you will get 2 lakh. Add up. How much are you getting in the second step? 31 lakh 51,000. 31 lakh 51,000. Now which one should you pay? Both are? No, sir. Whichever is lower. 31 lakh 62,500 or 31 lakh 59,000. Whichever is lower. Sir, this is lower. This is lower. That means will the asset get a relief? Yes. Of how much? Whatever is the difference. Because if there was no relief, you would have ended up paying how much, guys? This plus 4% says correct? Yes. But now, as he is paying, how much, sir? He is paying 31 lakh 59,000 plus 4%. The difference, you will get it as a marginal relief. Yes. So whichever is lower is 31 lakh 51,000 plus 4% says, so this is the final tax liability, guys. Final tax liability. Marginal relief is how much, sir? It is 31 lakh 62,500 minus 31 lakh 59,000. It comes to 3,500. Clear? Did they mention anything about marginal relief or surcharge in the question? No, but still you need to apply it. That means when marginal relief or surcharge is applicable in the question, even though they are not specifically mentioned it, still you need to apply it, guys. It will be like hidden information. As soon as you see the total income figure, you should know what you have to do. Even when it is rebate, they will not mention in the question, please check the rebate, please calculate the rebate, and you have to take care. Okay. Yes. Alternate method also is there. What is it? Guys, whatever we have learned in the class is in this way only. They have also given another alternate way. How is it? I will just explain, but I would suggest you to follow whatever we have done in the class. Oh, what is it, sir? Income tax including surcharge, that is which comes to 31 lakh 62,500 tax. Same like before. Same like before. No change till here. Okay, sir. First step, same to same. Then income tax computed on total income, that is 1 crore plus surcharge. Same way. 2959. 2959. Where is it? 2959. Okay, sir. Now they are changing. This steps, they are making little change. What is it? What is the difference between this they are calculating? What is the difference between the tax in this step and the tax in this step? Both including surcharge. Both including surcharge. How much is that, sir? 2,03,500. Guys, this is simple like this. Sir, if my total income is 1 crore 2 lakh, how much is the tax? We have calculated here. Correct? We have calculated the tax here. Now, if my total income is exactly 1 crore, what is my tax liability? We have calculated here. Clear? Over and above 1 crore, how much is the increase in income? 2 lakh. But for the 2 lakh increase in income, how much tax is increasing? 2 lakh 3,500. Hope you are understanding. I repeat, listen here. Interesting. Sir, if my total income is 1 crore 2 lakh, what is my tax liability including surcharge? It is 31 lakh 62,500. If my total income is 1 crore, then what is my tax liability including surcharge? It is 21 lakh 59,000. 29 lakh 59,000. Correct? Yes. So for 2 lakh increase in income, my tax is increasing by how much? 2 lakh 3,500. Clear? So that extra 3,500, I will get it as a relief. I will get it as a relief. So 3,500 we are getting as a relief. Remaining is 31 lakh 59,000 plus health and education. Plus health and education cess. So here what we are doing is we are not adding this 2 lakh. Instead of that, we are comparing. Okay. Increase in tax is how much? 2 lakh 3,500. But increase in income is how much? Only 2 lakh. So that means more than income, tax is increasing by another 3,500, which is not fair. Which is not fair. So that is why they are giving it as a relief. Hope you understand. Yeah, you can follow whichever is convenient. Both ways are acceptable, guys. But I would suggest, I think this would be better. The first way. The first way. Okay. But don't worry, both the ways you will get the marks. Don't worry. However you are doing it. Because amount remains same at the end. Okay. Question number 2. Miss Charlie, an American national, got married to Mr. Radhe of India. Oh, India's daughter-in-law. In USA on 2nd March 2024. ಇಲ್ಲಾಗಿದ್ರೆ ಚೆನ್ನಾಗಿರೋದು ಅಲ್ವಾ ಮೋಹನ್ and came to India for the first time on 16th March 2024 last year. We don't care about last year. We are concerned first about what, guys? Our previous year 24 25. See, to check the history and all it may matter, but first we are concerned about what? In our previous year, how many days she was in India? Okay. Oh, and came to India for the first time on 16th March 2024. She left for USA on 19th September 2024. That means it is understood that she was in India from year to year. Okay. She returned to India again on 27th March 2025. While in India, she had purchased a showroom in Mumbai. Okay, she again, one more story. She came to India again on 27th March. So it is understood from 27th March to 31st March, she was in India. After that, we don't care. Clear? From 27th March to 31st March of our previous year, again she was in India. So to count number of days in India during previous year, from when to when we have to count? From 1st April to 19th September, plus 27th March to 31st March. Hope you are getting it. Sir, she came on 16th March only, sir. That is for last year. From 16th March to 31st March, it will be counted for last financial year. Whereas for our financial year or previous year, we need to count from 1st April to 19th September plus 27th March to 31st March. And please be careful, the date of arrival and date of departure, both is considered to be in India. Yes, sir. Next. While in India, she had purchased a showroom in Mumbai on 30th April 2024, again last year, which was leased out to a company on a rent at 25,000 per month from 1st May 2024. Okay. Guys, this is in previous year 24-25 only, but she is renting from when? 1st May. 1st May. That means she will be getting rent only for 11 months during our previous year. Correct? That is from 1st May to 31st March. Oh. She had taken a loan from a bank for purchase of this showroom, on which bank had charged interest of 97,500 up to 31st March 2021. Interest on loan. Oh, and it is a showroom. Please be careful, not house. She had received the following cash gifts from her relatives and friends during 1st April 2024 to 31st March 2025. And now we cannot consider this as on the occasion of marriage. Why, sir? Marriage happened in last year. Clear? Sir, can we consider this on the occasion of marriage? No. From whom she received? From parents of husband, in-laws. Sir, exempt. Why? Relatives, no? Relatives, exempt. Next, sir, more than 50,000, still exempt. From relatives, whatever amount you receive, fully exempt. Nitin, Nijakano. Okay. Next, from married sister of husband, 11,000. Married sister of husband, part of relative. Okay. Part of relative, sister-in-law. Okay. From two very close friends of her husband, brother from another mother or sister from another mother. Okay. Is it exempt? No. 1,51,000 and 21,000. Aggregate is more than 50,000. Hence taxable. Okay. Determine our residential status and compute the total income chargeable to tax along with the amount of tax liability on such income for the assessment year 25-26 if she opts out of default tax regime. Opts out of default tax regime means she is following what? Optional scheme under section 115 DAC. First requirement. There is another requirement. We will see that later. Why to mix up words? First, 2A. We need to decide the residential status. Observe the presentation there. Under section, or you can start with as per section 6 subsection 1. An individual is said to be resident in India in any previous year if she or he satisfy any one of the following conditions. He or she has been in India during the previous year. Guys, for us previous year is what? 24-25. Clear? Yes. For a total period of 182 days or more. Or if first condition is not satisfied, second one. He or she has been in India during the 4 years immediately preceding the previous year for a total period of 365 days or more and has been in India for at least 60 days in the previous year. And you might also ask me, sir, is she covered in the explanations? No. She is not an Indian citizen. She is not a person of Indian origin. Hence, she is not covered in the explanation tax. Yeah, that means both the conditions are applicable for her? Yes. If an individual satisfies any one of the conditions mentioned above, he or she is a resident. If both the above conditions are not satisfied, then they are non-resident. Yes. Therefore, the residential status of Miss Charlie, an American national, for assessment year 25-26 or previous year 24-25, has to be determined on the basis of her stay in India during the previous year 24-25 and in the preceding 4 years. That is with respect to second condition. Clear? Yes. Preceding 4 years, she was there only for 16 days. So how many days she was in India during previous year? From 1st April to 19th September. Guys, she was there in India in last year also. That we will count here. Don't worry. During our previous year, how many days she was in India? From 1st April to 19th September, including both the days. It is 170 days. Plus, again she came back on 27th March till 31st March. Again, she go back or not? They are not mentioned in the question. Assume that she was in India till 31st March. Okay. Totally how many days, sir? 172 plus 5, 177. Straight away, first condition ruled out. First condition ruled out. Second condition is alive. So 60 days satisfied, sir? Yes, 60 days satisfied. Next, one more attached condition is there for that. What is it? 365 days or more during 4 years preceding the previous year. Did she satisfy that? No, sir. Last year she was in India only for 16 days. Only for 16 days. They are given from 1st April to 31st March. That is totally. But we need to count it from when to when. From 16th March to 31st March. Clear? So do simple. 31 minus 15. 31 minus 15. Why 15, sir? Because 16th is counted to be in India. Counted to be in India. So 31 minus 15. 15 days she was outside India. That is from 1st March to 15th March. Remaining days she was in India. Got it? Yes, sir. So 16 days. And she came to India for the first time, guys. So no history for her in India. Clear? Yes. So 16 days. That means this condition is not satisfied, sir. Yes, she doesn't satisfy both the condition. Who is she? Non-resident. The total stay of associate during the previous year in India was less than 182 days. And during the 4 years preceding this year was for 16 days. Therefore, due to non-fulfillment of any of the two conditions for a resident, she would be treated as a non-resident for assessment year 25-26. Okay, sir. This is the first answer. Then they've also asked you to calculate the income. And she has let out a showroom. Guys, please be careful. There is an amendment in this. Hope you guys know. If the assessee is engaged in the business of letting out of commercial properties, then the income is taxable under the head PGBP. Now this girl, sir, is she in the business of letting out the showrooms? No. See, obviously showroom is commercial property only. Clear? But is she in the business of letting out that? No. She has taken it as an investment. That's all. Clear? So should we consider it in the course of furtherance of business? No. So where is this rental income taxable? House property. Hope you are aware. There is an amendment actually. I repeat this. Listen. If assessee is in the business of letting out of commercial property, then whatever rental income is earned is taxable under the head PGBP. Sir, what if the assessee is in the business of letting out of residential building? It is taxable under house property only. It is taxable under house property only. Okay. But here, is this girl doing this renting in the course of business? No, sir. Papa. Miss Charlie, whatever investment she has done, let me read that. Okay, here. While in India, she had purchased a showroom in Mumbai on 30th April 2024, which was leased out to a company for a rent of 25,000 per month from custody. Clear? So nowhere they have given it is in the course of business, and she is not doing any business in fact. Clear? So can we consider not in the course of business? Yes, sir. Better to give a note for it. Okay. It is assumed that Charlie is renting out the showroom not in the course of business. Not in the course of business. So hence, where it will be taxable, guys? House property. House property. Rental income. We are straight away taking it as GAB because they are not given municipal value, fair rent, standard rent and all. So in that case, actual rent would be taken as GAB. Yes, sir. You can see here. Showroom located in Mumbai remained on rent from 1st May to 31st March. So 25,000 into 11 lakhs. Straight away gross annual value. Gross annual value, they have given a note for it. Let us see what is it. Actual rent received has been taken as the gross annual value in the absence of other information. Municipal value, fair rent value, and standard rent in the question, they are not given. These values are not given. So straight away actual rent is taken as GAV. Okay, sir. So municipal tax paid, they are not given, so we cannot consider anything. Then net annual value we will take. Then on that, under section 24, there are two deductions. 24A will give you deduction 30% of NAV. 24B interest on loan. So 30% of 2,75,000 comes to 82,500. Then interest on loan, they only given the question, which is 97 500. Is it allowed, sir? Yes. Whether it is residential building or commercial building, allowed. Don't worry. Yes, sir. So total comes to 1,80,000. Put it in bracket. Whenever you're deducting anything, put it in bracket. So what is the net income from house property? 95,000, which is taxable. Next, they don't have any other income, straight away income from other sources. That is for the gifts. Gifts is always taxable under the head income from other sources, but only if it is received from employer under the head salary. Yes. Cash gifts received from non-relatives is chargeable to tax as per section 56 to 10. If the aggregate value of such gifts exceeds 50,000. 50,000 first one, guys. 50,000 received from parents of husband would be exempt. 50 or 51 it is? 51 actually. Okay, anyway, they have mentioned 50 here. 51 it is. 51,000 received from parents of husband would be exempt since parents of husband fall within the definition of relative, guys. So gifts received from relative, irrespective of the value, is exempt. And on what occasion they are giving also doesn't matter. See, gifts received on the occasion of marriage from anyone exempt. But if you are receiving the gift from relative at any time, irrespective of the value, it is exempt. Oh, sure. Next, 11,000. 11,000 received from married sister of husband is exempt. See, all this they will confuse you by giving is she dependent, independent, and all. For relative definition, here dependency doesn't matter. Clear? Because they have given married sister and all. Sir, married sister, no, not a part of family, not a part of relative. No, no, no. For relative definition, which is given under section 56 to 10, she is also included. Yeah. 11,000 received from married sister of husband is exempt since sister-in-law falls within the definition of relative and gifts from relative are not chargeable to tax. So both the cases nil. Last case. Gift received from two friends of husband 1,51,000 and 21,000 aggregating to 1,72,000 is taxable under section 56 to 10 since aggregate value is how much, guys? 151 plus 21, 172. Sir, you might also ask me, sir, 21 is less than 50. No, individually you should not check aggregate. They've used the word aggregate. Now all of you gifted me 10,000. Is it taxable for me? Yes. Because aggregate value will be more than 50,000. Don't see person to person. Okay. As a receiver, did I receive more than 50,000 in a year? If yes, it is taxable. One person, how much did he or she give? Doesn't matter. Okay. So entire 172 is it taxable, sir? Yes. 172 tax under IFOS. So total income comes to 267. Guys, when question is silent about deductions and all, assume it to be 0. Clear? Here assessee is actually following which scheme? Optional scheme, I guess. Clear? If he is eligible, if he is making any investments and all, they are eligible for deductions. But question is silent. No, I cannot assume anything. So straight away, this will be GTI, this will be total income, both. Got it? Hello? Tax liability also they have asked. Okay. Tax liability. Tax on total income. Optional scheme now. So basic essential limit is how much? Basic essential limit is how much? 2 lakh 50 na 3 lakh. Hello. It is optional scheme. It is optional scheme. So 2 lakh 50. Clear. And moreover, her age is not given, and she might be non-resident. She is a non-resident actually. So she is not eligible for higher basic essential limit. Even if her age is more, she is recently married, obviously. Okay. So less than 60 only. Even if by chance if you assume more than 60, non-resident, no. Basic essential limit 250, no. Dushan. Yes. Yeah. So up to 2 lakh 50 nil, guys. And 2 lakh 50 to 5 lakh 5%. So how much it comes to? Only 17,000. 17,000 into 5%, 850 plus 4% health and education star rebate. No rebate for non-residents. No rebate for non-residents. Who is Charlie? Non-resident. So is she eligible for a rebate? No. Because you might get a doubt, sir, total income is within 5 lakh. So rebate on that. Rebate is not available for non-resident individual. So add 4% says 884. Tax liability has to be rounded up to nearest 10 rupees as per section 288B. 288B. 880. 5 or more next 10, less than 5 previous. Got it? Yes. First note I have read. Second and third note. Okay. I have already explained this part. Second and third note I have already explained. Yes. Let us go to question number 3. 2B. Yes, yes. Good. You guys are alert. Would her residential status undergo any change, assuming that she is a person of Indian origin and her total income from Indian sources is 18 lakh, more than 15 lakh, and she is not liable to tax in USA? Tricky question. Tricky question. What is your answer? Deemed resident. See, other point will reflect other. Whatever point they are asking you to check is deemed resident. Clear? Because number of days she didn't satisfied, so she is non-resident. Now they are telling Indian income is more than 15 lakh and she is not paying tax in USA. So we need to check section 61A. Is she covered there? No. Section 61A is not applicable to person of Indian origin. It is applicable only for Indian citizen. Correct? Let us see. Let us see. You can see deemed resident point is given here in note. Okay, now I will just read it quickly. Notwithstanding anything contained in section 6, subsection 1, an individual being a citizen of India having a total income other than the income from foreign sources exceeding 15 lakh. Guys, who is covered here? You can see being a citizen of India. Did they mention anywhere a person of Indian origin? No. Okay. Exceeding 15 lakh during the previous year shall be deemed to be the resident in India in that previous year. If he is not liable to tax in any other country or territory by a reason of his domicile. Domicile means where they have permanent home or residence or any other criteria of similar nature. They will be considered as what? Deemed resident. Will Miss Charlie fall here? No, sir, because she is not a citizen. She might be, as per the requirement B, she is a person of Indian origin, but Indian person of Indian origin is not covered here. Please be careful. Why they have tried to confuse you here? Here the person is covered, person of Indian origin. In the second explanation, whereas here they are not covered. Hope you got it. Yes. Sure. Let us see the answer. Residential status of Miss Charlie in case she is a person of Indian origin and her total income from Indian sources exceeds 18 lakh. If she is a person of Indian origin and her total income from Indian sources exceeds 15 lakh, 18 lakh in her case, the condition of stay in India for a period of 120 days during the previous year and 365 days during the 4 years immediately preceding the previous year would be applicable for being treated as a resident. Yes, sir. You can see, sir, in that case, is second condition applicable for her? Yes. But listen here. Will she come here or in this paragraph? This paragraph. Clear. I repeat, guys, this paragraph, second explanation, if she is covered, then the total income which is from India is only 15 lakh. But if it is more than 15 lakh, then second condition is alive. But instead of 60 days here, instead of 60 days, it would be 120 days. Let me read it. First explanation B I will read, then I will continue. Actually, our case will not fall in B, but as it is connected, I'm just reading. Okay. Indian citizen or a person of Indian origin engaged outside India in an employment or a business or profession or in any other occasion, art of earning the livelihood. Occasion means art of earning the livelihood. Who comes on a visit to India during the relevant previous year and his total income other than the income from foreign sources is up to 15 lakh. That means in that scenario, second condition is not at all applicable. Sir, what if in the same case, if Indian income is more than 15 lakh? I have given it here. However, for the purposes of clause B, that is above, as mentioned above, in case of Indian citizen or a person of Indian origin, having total income other than the income from foreign sources exceeding 15 lakh during the previous year, then second condition is applicable. And for the words 60, 120 days has been substituted. Clear? But will Charlie satisfy that? No, sir. 120 days she will satisfy during the previous year. But when it comes to 365 days, she will not satisfy because in the last 4 years, she was in India for only 16 days. As both the conditions are cumulative, as one of the condition is not satisfied, she has not satisfied the second condition. Again, she is what? Non-resident. Okay, you can go ahead and check even deemed resident. Even there, she is not covered. Even there, she is not covered, guys. Yes. Okay. So she is a non-resident in India because she couldn't satisfy both the conditions given under section 6 subsection 1. Then, further, since she is not a citizen of India, the provisions of Section 61A deeming an individual to be a citizen of India would not get attracted in her case, even though she is a person of Indian origin and her total income from Indian sources exceed 15 lakh. And she is not liable to pay tax in US. Will it matter here, sir? No. Therefore, our residential status would be a non-resident in India for previous year 24-25. Now you might ask me, sir, she became non-resident and she has Indian income 18 lakh. Will she not pay tax? Yes, she will pay. Even for a non-resident, income earned in India or received in India taxable. Correct? Yes. See, they are not asked about the taxability and all here, but still I'm just telling you. She has Indian income of around 18 lakh or more than 18 lakh. Sir, is it taxable in India? Yes. Clear? Yes. Because even for a non-resident, income earned in India or received in India will always be taxable. Yes. Sure. We'll move to question number 3, guys. Dr. Niranjana, a resident individual aged 60 years, is running a clinic in Surat. Our income and expenditure account for the year ending 31st March 2025 is as under. That is for our previous year. Let us see one side at a time. First, income side. By consultation and medical charges, 58,85,850. Income tax refund, 5,450. In that, principal is 5,000 and interest is 450. Guys, see, is it taxable under the head PGBP? No, you have to remove it first. Because of this, our profit would have increased. So what should we do? Remove it. Where is it taxable, sir? Other sources. How much? Only 450. Only interest. Sir, why not principal? See, when you are removing from PGBP, you have to remove fully 5,450. Why? Because here, how much credit is given? 5,450. How much increase in income? 5,450. But while including it under the head other sources, you have to include only 450. Why only 450, sir? Simple, guys. What I gave, I got it back. Refund. So 5,000 is, I paid excess, you gave it back to me. Is it my income? No. But you paid 450 extra. Is that a income for me? Yes. Next, dividends from units in UTI. Again, income from other sources. Winnings from game show on TV. Net of TDS, 35,000. TDS is 15. Gross figure is 50,000. If I add up both, yes. So, where is it taxable? Again, other sources. Then rent, 27,000. So, normally it will be taxable under the head house property. But let us see what adjustment they have given in the bottom. Coming to the debit side, that is expenditures. Medical consumed, staff salary, clinical consumables, rent paid. Okay. Administration expenses, amount paid to Scientific Research Association approved under Section 35. It is allowed provided the assessee is following optional scheme. Default scheme is blocked. Net profit is 4,40,400. Guys, actually, when it is income and expenditure account, profit is not the right word to use. It should be surplus. Clear? But for income tax purpose, don't question the question. Whatever they have given, please take it. Clear? Normally, this would be the starting point, and we will make the necessary adjustments to compute the income under the head PGP. Oh. They have given some adjustments here. Guys, similar question I have provided in my question back, which is actually Gurumurthy question. Yeah, but few changes are here, but almost same, similar question I can tell. Rent paid includes 30,000 paid by check towards rent for a residential house in Surat. Okay. 30,000 is for a residential house. So what should we do? Disallow. Disallow 30,000. Oh. Clinical equipments are on this we need to calculate depreciation. On 1st April, opening WDB 5 lakh. On this entire 15%. India, yes, on clinical equipment's depreciation rate is 15%. Then on 7th December, acquired cost by check 2 lakh. Right, 7th December. Purchased and put to use for less than 180 days. So on this, how much depreciation? Into 15%, into 50%. Got it? Yes, sir. And sir, clinical equipments normally comes under plant and machinery. Yes. What is the depreciation rate? 15%. Can we claim additional depreciation? She's a doctor. Okay, not manufacturer. Sir, manufacturing bodies? No. Clear, huh? So not manufacturer because additional depreciation is allowed only for manufacturer. Correct? Yes, that too installed in factory. Okay. Sure. Next. Rent received. Okay, whatever rent they have given here, they are talking about. Rent received relates to residential house property situated at Surat. Gross annual value 27,000. Municipal tax of 2,000 paid in December has been included in administration expenses. Look here. 2,000 is allowed as deduction while computing income from house property. But while computing PGBP with income, what should you do? Disallowed. Okay, you already debited here. 2,000 is disallowed. Why, sir? It is personal in nature. Can you claim it under the head house property? Yes. Next, she received a salary of 7,500 per month for full cure hospital, which has not been included in the consultation and medical charges. So this, assuming she is in employment, okay, she is receiving it as a salary. Assuming she is in employment, will be taxable under the head salary. Oh, next. Dr. Niranjana availed a loan of 5,50,000 from a bank for higher education of her daughter. She repaid principal of 1 lakh and interest thereon 55,000 during the previous year. Interest on education loan is allowed as deduction under section 80E, E for education. E for education. Sir, what about principal? No deduction. She paid 1 lakh as tuition fee, not in the nature of development fee or donation, to the university for full-time education of her daughter. Deduction under section 80C. 80C. Provided they are following optional C. Let us see that all. An amount of 28,000 has also been paid by check on 27th March 2025 for her medical insurance premium. Deduction under section 80D. What is her age? 60. Oh, 60 she has said. Senior. Respectable. Chalo. So can she claim full 28? Yes. Maximum is 50. Less than 60 means maximum 25. Clear? More than 60 means 60 or more means 50 is the maximum. Can she claim full 28? Correct. Correct number one. Yes. Chalo. What is the requirement? From the above, compute the total income of Dr. Srimati Niranjana for the assessment year 25-26 under the default. Oh, as well as optional. As per the normal provisions of the Act, 2 calculation. Okay, and obviously for this kind of questions, marks weightage will be more or less. Like, and please be careful. See, now what I did this question is from top to bottom, I read everything. Clear. There is another strategy to read this kind of question, especially total income question. You can also follow like this. First, go and read this part, what they are asking. Okay, then come and read the data given in the question. So that when you are reading, you already know what to do. Clear, because few things are not allowed under default regime. Assume question is straight away on default. You know most of the things you are not allowed, not allowed, not allowed. Clear, but here you have to do both optional as well as default. Is that clear? So what you do is another strategy I'm telling you. Go read first this. Okay, then come and read the data. Because when you're reading the data, you already know what you are supposed to do for each item under the respective schemes. Is that clear? Yes. Only when question is lengthy, you can do that. That is like total income questions. Okay, let us go to the answer. One by one. Okay, and guys, whenever the question is on total income, the main target would be PGBP head. There will be other things also taken care in the question, but the main target would be on PGBP head. Income from salary, how much? 7,500 into 12 because per month it is. And standard deduction, which scheme it is? First default they are doing. So under default scheme, what is the standard deduction? 75,000. 75. Let me put it in bracket. So what is the income from salary? 15,000. And just give a note for this. Telling it is assumed that Niranjana is under employment with that hospital. With that hospital or employer-employee relationship with the hospital. Because question is not clear on that. Now you better give a clarity by way of note. Okay. Then income from house property. Guys, they told the gross annual value is straight away 27,000, right? Yeah, they only given. This is actually actual revenue. Okay, 27,000. And municipal tax paid 2,000 is there. We need to deduct. Clear? Yes. So 2,000 municipal tax. It's better to put it in bracket whatever you're deducting. So you will get net annual value 25,000. No interest and all. So 30% of NAV allow as a deduction under section 24A. 24A. Okay, sir. How much it comes to? 25,000 into 30%, which comes to 7,500. Put it in bracket. So what is the income from house property, sir? 17,500. Next, income from profession. Income from profession. She is a doctor, so that is why profession it is mentioned. Guys, whatever profit they have given in the question, take it as a base. That is in income and expenditure account. 4,40,400. And please be careful. Listen. Here there are few things which are credited, which are not taxable under the head PGBP. What should you do? Deduct them. It has already increased your income. What should you do? Deduct it. And while deducting, don't worry how much is taxable and all. How much is credited, just remove them. Clear. Later we will see where is it taxable and how much. For example, sir, here only 450 is taxable under other sources. So while removing, should I remove only 450 or should I remove 5,450? 5,450. Why, sir? What is credited here? 5,450. Please remove it. But while including it under the head other sources, how much should you include? 450. Same way. Listen here. This is net figure 35. Gross figure would be 35 plus 15. 50. Correct? Now while removing from PGBP head, how much should you remove? 35. But while including it under the head other sources, how much should you include? 50. Including TDS. Gross figure should always be considered to compute total income. Sir, what about TDS? You will get it as a credit while computing the tax liability. You can reduce it from your final tax liability, guys. Is that clear? Keep that one thing in mind while you are deducting any income which is credited to P&L account or income and expenditure account, which is not taxable under the HPGBP. Please deduct whatever is credited. While including it under the respective head, how much will you include? Whatever is taxable. Whatever is taxable. Okay, sir. Then also debit side, I guess few things. Rent paid includes some personal expenditure. Add back that. And administration expenses 2,000 municipal tax. Add back that. Then default scheme will not be allowed. 150 is not allowed under default scheme. Contribution to outsiders not allowed. Okay, if you are doing your own research business, for that whatever you incur is allowed. But contribution to outsiders not allowed. Okay, sir. Sure, we will take care of all that. So 4,40,400 is a base for us, which is net profit. From that, items of income to be treated separately or taxed separately. What and rent, dividend, winning from game show. You can observe 35 year reducing, not enter 50 because what is credited you have to make minus your income tax refund also full amount, including principal. Okay, sir. We deducted everything. So total comes to 77,950. Then allowable expenditure. Depreciation was not debited, but should we claim it? Yes. Compulsory claim as per section 32. Depreciation. How much, sir? On opening value, full 15%. Whereas for the asset acquired and put to use for less than 180 days, it is 7.5%. How did we get it, sir? Better you show properly. Into 15%, into 50%. Okay, that would be better because there is no rate called 7.5%. How they have shown it directly is 50% or 15%. Clear? Yes. So total depreciation comes to 90. This is also deduction. Deduction. It is an expenses which you can claim, but not a debited. But not a debited. Deducted. Okay. They have also given here. For assets acquired and put to use for less than 180 days, only 50% depreciation will be allowed in the present year. Next. Item of expenditure not allowable while computing business income. Amount paid to Scientific Research Association not allowed under default. Sir, is it allowed under optional? Yes. 150. Add it now. Rent for a residential accommodation, personal in nature, disallowed. As per which section, sir? 37. 37 will not allow you personal expenditures. Then municipal tax also. This is also like personal in nature only. Why? She is not paying it for her office or shop. Okay, or clinic. She is paying it for her residential building. So disallowed. 2000. Okay, so totally 182. So what is the income from profession? 4,54,450. No capital gains income, so straight away go to income from other sources. Interest on income tax refund. What is taxable included? How much? 450. What is that 450? Interest. Sir, what about principal? I told you. I paid extra, they gave it back. Is it my income? No. Next, dividends from UTI, taxable in the hands of unit holder, 10,500. Winnings from TV game. Guys, whenever net figure is given, while computing the income, you should take gross figure. So 35 plus 15, which comes to 50,000, which is 60,950. So how much is the gross total income? 5,47,900. So deductions under chapter 6A, ATC, ATD, ATE. Okay, not allowed. Not allowed. They are written separately. Better you give one single note for all. Clear? Yes. So total income is same. Total income is same, guys. Is that clear? Yes. Chalo. Now coming to normal provisions, which is optional scheme. Optional scheme, they have taken the same gross total income as per default regime as a base. Sir, can we also do it? Yes, because again, don't start from the top. Anyway, same question now. So you need not start from the top. So they have taken this as the base. Any adjustments, sir? One second. For income from salary, 75 will become 50 under optional. Correct? So extra 25 you have claimed now. So what should we do? Add 20. Add 25. Okay. House property, I don't think any change is there. Then here, that this one. Sir, can we reduce this under the optional scheme? Yes, 150 you reduce. 150 you reduce. Okay, that are the two changes for gross total income plus all the deductions we can claim. Yeah, yes. So standard deduction 75 was already claimed, but under optional scheme it is only 50. So extra 25 is claimed. So we are adding it. Hope you understood. How did we get 25? 75 minus 50. Okay. Yes. Then this 100% deduction for contribution to approved research association is allowed. So deduct it. 150. Deduct it. Okay, sir. So gross total income as per normal provision or as per optional scheme is 4,22,900. So deductions. Section 80C. Tuition fee paid to university for full-time education of daughter. Is it allowed, sir? Yes, 80C. Next, 80D. Medical insurance premium. Allowed fully because she is a senior. Okay. Sir, what if she was not a senior? Then only 25. Only 25. Restricted to 25. Sir, remaining 3,000 can we carry forward? No. You know, na? Okay. Whatever deductions are there, maximum. Remaining. Sir, can we carry forward? No. Forget it. In this question, not relevant, but just I mentioned. Section 80E, interest on loan taken for higher education. Only interest is allowed, not principal part. 55,000. 55,000. So what is the total income here? 2,39,900. Okay. Notes are given. Let me just read it. First note. The principal amount received towards income tax refund will be excluded from computation of total income. Interest received will be taxed under the head income from other sources. Next, winnings from game show on TV should be grossed up for chargeability under the head income from other sources. Okay, you should always say gross figure, that is before TDS. That is 35,000 plus 15,000. Thereafter, while computing tax liability, TDS of 15,000 should be deducted to arrive at the tax payable. Winnings from game show are subject to tax at 30% as per section 115B. Clear? I mean, sir, how did they deduct? Why did they deduct 15,000 TDS? As per section 115BB, TDS applicable on casual income is actually 30%. Actual earnings is 50,000. No, on that 30% TDS is there. On that 30% TDS is deducted. Oh, next one. Dr. Niranjana would not be eligible for deduction under section 80GG. Kaji? GG. For what? Rent paid. Why, sir? Because she is earning rental income in Surat. And there only she is staying in a rented house and paying rent. As per 80GG, one of the condition is if you are having your own house in the same locality, then you cannot claim deduction for rent paid under section 80GG. Got it, G? Sure. Question number 3, done. Good question. Fourth one. Miss Purvi, aged 55 years, is a chartered accountant in practice. She maintains her accounts on cash basis. On what basis? Cash basis. Guys, you know, while computing the income under the head PGBP and other sources, assessee is free to follow either the mercantile system of accounting or cash system of accounting, whatever they are regularly following to maintain the books of accounts. Even in income tax, they can follow the same. Clear? So, this girl, she is following cash basis. Can we follow the same thing for income tax purpose? Yes. Our income and expenditure account for the year ended 31st March 2025 reads as follows. Let me read the credit side first. Fees earned from audit to taxation service or consultancy. Okay. Total comes to 55 lakh 98,300. Nodo Mohan. Clarify as early as possible. Dividend on shares of X Limited, an Indian company, gross 10,524, other sources. Income from UTA, gross 7,600, again other sources. Honorarium received from various institutions for valuation of answer papers, 15,800. This is also taxable under other sources. Then rent received from residential flat let out, 85,600, house profit. Clear. What should we do? While computing the PGPP income, we should remove all this. We should remove all this, provided you are taking the profit as a base. But here she is following cash basis. Please be careful. Okay, sure. Then that's all, no? Credit side. Yes. Debit side. Salary to staff. Stipend to article assistant. Salary for staff, stipend. You see, what is the huge? There is a huge difference. Incentives to article assistants, 13,000. Office rent, 12,24,000. Printing and stationery, amounts I will not read, only items I will read. Printing and stationery, meeting, seminar and conference. Purchase of car for official use, not a revenue expenditure. Capital, she claim depreciation? Yes. Repairs and maintenance and petrol of car. Travel expenses. Municipal tax paid in respect of house property. Disallowed here, allowed under house property. Net profit is 9,28,224. Oh, other information. Allowable rate of depreciation on motor car is 15%. Value of benefits received from clients during the course of profession is 10,500. From whom we are receiving claims during the course of profession? Where is it taxable? PGB. Oh. Incentives to article assistant represent amount paid to two article assistant for passing CA intermediate examination at first attempt. Very good principle. Oh, sir, is it allowed? Yes, allowed as an expenditure to encourage the employees or article assistants. Repairs and maintenance of a car include 2,000 for the period from 1st October to 30th September. Guys, interesting adjustment. This they have tried to mislead you. Look here. Repairs and maintenance, 2,000 whatever is paid is for the period from 1st October to 30th September. Our previous year is from when to when? 1st April to 31st March 25. And this is paid from 1st October to 30th September 25. That means from 1st April 25 to 30th September, it falls in next year. Correct? Huh? I repeat. See, this is paid for one full year. For one full year, 6 months falls in our previous year. Another 6 months will fall in next year. So what you feel is, sir, 1,000 is prepaid. So we will not allow it in the current year. 1,000 is paid for current year, 1,000 is prepaid, right? So claim it in next year. No, we are not following approval. If I was following approval, yes, we would have done it. Clear? What are they following? Cash basis. So entire 2,000 allowed? Huh? Yes. Entire 2,000 allowed. Sir, 1,000 is paid for next year. Doesn't matter. Doesn't matter. Cash basis. Salary includes 30,000 to a computer specialist in cash for assisting Purvi in one professional assignment. More than 10,000 is paid in a single, assuming single day, to a single person. Disallowed. How much? Full 30,000 is this. As per which section? 40, A3, 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 B3 alla, A3. The traveling expenses include expenditure incurred on foreign tour of 32,000, which was within the RBI norms. Assuming it is for the professional purpose, allowed guys. If they had given somewhere that for personal purpose and all, we would have disallowed. Yeah, yes. Next, medical insurance premium on the health of dependent brother and major son. Guys, dependent brother is not covered in the list. And major son dependent on her amounts to 5,000 and 10,000 respectively paid in cash. You cannot pay in cash. Only for preventive health checkup up to 5,000 you can pay in cash. Whereas here it is paid as premium. Is it allowed, sir? No. See, first of all, brother is not covered. Yeah. For 80D, guys, family includes two categories. Family includes two categories. Associate and family. Associate and family means family here means dependent children and spouse. And another category is parents, mother, father. Clear? Yes. Is brother covered in that list? No. Coming to son. Son is covered provided he is dependent. So he is dependent, it seems good. But payment is made in cash. So no deduction. So no deduction under section 80D. She invested an amount of 10,000 in National Savings Certificate, ATC deduction. She has paid 70,000 towards advance tax during the previous year 24-25. You will reduce it from final tax liability. She has already paid in advance. Compute the total income and tax liability by Ms. Purvi for assessment year 25-26 in a most beneficial manner. In a most beneficial manner means in simple they are asking under both and tell wherever it is lower that is beneficial. You need to calculate tax liability under both optional as well as default and tell whichever is lower as most beneficial to her. Clear? Yes. This is another way of asking the question. Here they are not asking you both, but they told whichever is most beneficial to her. Obviously, we have to do both. Yes. Question number 4. Sorry, answer now. Computation of total income and tax payable by Ms. Purvi for assessment year 25-26 under default tax regime as per section 115 BAC. Income from house property, guys. Very similar to whatever we discussed in the previous question. House property, yeah. Calculation is done here. Working note 1. Gross annual value 85,600. Same. Actual rent itself is taken. You can see here. They have mentioned a note. Rent received has been taken as gross annual value in the absence of other information relating to municipal value, fair rent, and standard rent. And municipal tax paid is there. How much, sir? 3,000. So net annual value you will get. Question is silent about interest. Give only 30% of NAV as a standard deduction, which comes to 24,780. 780. So what is the remaining income from house property? 57,280. Oh, it's 57 to 80. Done. Profits and gains of business or profession. Profits and gains of business or profession. They have done it by way of working note. Oh, working note 2. Income under the heads profits and gains of business or profession. Net profit, we are taking it as a base. How much is, sir? 9,28,224. First, you can remove whatever is covered as income but not taxable under the head PGBP. You can remove them first. Okay, so this are taxable under the head other sources, whereas this is taxable under the head house property, which we already considered. Clear? Yes, sir. Whatever is credited, please remove that much. Then coming to expenses which is debited but not allowed. We call it as disallowed expenditure. Salary paid to computer specialist as it is paid in cash, assuming it is paid in a single day, and entire amount is disallowed. Entire amount is disallowed. Then amount paid for purchase of car, capital in nature, disallowed. But is depreciation allowed on this? Yes. How much is that? 80,000. So claim depreciation. Where they have shown the depreciation here. Depreciation on motor car. It has been assumed that motor car is put to use for more than 180 days. So full depreciation, 80,000 into 15%. Alternatively, you can also assume that it is put to use for less than 180 days. In that case, 15% into 50%. Yeah, if question is silent, better to assume more than 180 days. More than 180 days. So it is 80,000 into 15%. Oh. Then coming to this, municipal tax paid in respect of residential flat is also disallowed. We claimed it while computing the income from house property. Yes. Next, they have given in the additional information value of benefit received from clients not covered in income and expenditure account but given in the adjustments. So should we add this? Yes, because it is taxable under the heading PGBP. You need to add it. Okay, sir. So finally, you will get income from business or profession. How much? 9,20,000 to 1. 9,20,200 guys. So you can see some more notes they have given. Incentive to article assistant for passing CA intermediate exam is allowed. Is allowed as an expenditure. Then repairs and maintenance, I already told you. As they are following cash basis, even though it is paid for 6 months of next year, still allowed. Still allowed on cash basis. Then 32,000, whatever is expended on foreign tour is assumed to be in connection with the profession. In connection with the professional work in allowed. Sir, what if I assume it to be for personal work? Then disallowed. Then disallowed. Sorry. Yeah. So done with this. PGBP done. Bring it to the main answer. Then we also have income from other sources. There are 2, 3 items. I guess 3 items under income from other sources. Consider all of them. Yes. Dividend on shares of X Limited, income from UTI, then honorary 15,800. All these three put together 33,924. Other sources. Yes. So income from other sources, you will get gross total income. Then deductions under chapter 6 is not allowed under default regime. Okay, even though assessee is eligible, but under default regime it is law. So no claim for it. So 10,11,944 is the total income as well as gross total income under default regime. So it is rounded off to 940, nearest to 10 rupees as per section 288A. Compute tax also here. So can I do it as a separate table? You can do it. If not, there only in the second part. Up to 3 lakh, nil. 3 lakh to 7 lakh, 5%, which comes to 20,000. 7 lakh to 10 lakh, 10%, which comes to 30,000. Then 10 lakh to 12 lakh it is, but we will stop it at 10 lakh 11,940, which is 15%. Plus 4% health and education cess on gross tax liability. So 51,791 into 4%. No rebate here, no rebate because income is more than 7 lakh by a bigger amount. Yes, sir. So final tax liability is 53,863, guys. They have given in the question, guys, don't stop it here because in the question they have given about advance tax and all, you how to reduce it. So advance tax paid 70,000. Plus they have also given clue about the TDS. Where they have given the clue, sir? You can see they have mentioned gross. That means this is gross figure. But obviously TDS would have been deducted. So how much, sir? On this 10%. On this also 10%. Clear TDS. This is under section 194K, not 194. Okay, please be careful. So we are reducing that also. Tax deducted at source on dividend income from an Indian company under section 194. That is TDS on dividend income 10% tax. So whatever income is there into 10%. TDS rate is 10%. Yes. So tax deducted at source on the income from UTI under section 194K 10%. Again 760. Okay, whatever is there into 10%. Hope you understood. Sir, why did you take it, sir? Simple, guys. Here they are given a clue. What is covered here is gross figure. That means they are giving a hint for you that yes, TDS is deducted, but what is given here is gross figures. Clear? And see, even on this and all, TDS might be deducted, especially under section 194J, but they didn't give any hint there. Clear? Sir, can I still consider that on this TDS is deducted under section 194J? Yes, but better avoid. Better avoid it because nowhere they have given gross and all. Clear? Here we just took it because they have given the inter. That's all. But no doubt, even on this TDS would have been deducted by the payer. Okay, and on this actually, as it is like professional fees and all, TDS would be deducted under section 194J. JJ. Okay, yes. So it is coming to negative. After I reduce both of this, it is coming to negative. That means what, sir? Refund. Assessee is eligible for a refund. Even this has to be rounded up to nearest to 10. Nearest 10. Oh, sir, when they have given this as well as this, which one should I round off? The last final figure. Final figure you round off. Is that clear? Yes. So assessee is eligible for a refund of 17,950 if he or she is, I guess, Purvi. So if she is following default regime, now let us go and work under normal. Gross total income we are taking same 10 lakh 11,944. Is there any change in any of these figures? First cross check that. Okay, I will just go and see all these working notes. Just a minute. No change here. PGBP also, I guess, no change. Other sources also will be no change, I guess. Okay, no change, guys. Gross total income, no change. But deductions will come into picture now. Deductions will come into picture. Okay, how much deductions are? They have told 10,000. How is it? They have shown it as working note 4 reasons. Okay, let us see. Working note 4, where are you? Yes. Deduction under section 80C, that is investment in national savings certificate, 10,000. Whereas for 80D, no deduction. Why? Notes is given. Premium paid to ensure the health of his brother is not eligible for deduction under section 80D, even though he is a dependent, since brother is not included in the definition of family for 80D. Not a part of family for 80D. As I told you, two categories are there, associate and family and parents. In both, brothers are not covered. Okay. Premium paid to ensure the health of major son is not eligible for deduction, even though it's dependent. Why, sir? Because the payment is made in cash. Okay. Even here also, actually, payment is made in cash only, but either way, not. Oh, only 10,000. Only 10,000. Okay. So total income comes to 10 lakh 1,944. Round it off to nearest 10, 940. So optional scheme up to 2 lakh 50 nil, 2 lakh 50 to 5 lakh 5%, which comes to 12,500. Then more than 5 lakh to 10 lakh 20%. So you will get the difference between upper limit and lower limit. That is 10 lakh minus 5 lakh into 20% comes to 1 lakh. More than 10 lakh it is 30%, but it is only 1,940 into 30%, 582. Is she eligible for a rebate? No. Total income is more than 5 lakh. Is surcharge applicable? No. Total income is less than 50 lakh. So straight away health and education cess. So final tax liability is 1,17,605. You are also reduced. Advance tax, TDS. Both you reduce. So what is the final tax payable now? After reducing TDS, advance tax, 45,790 under optional scheme. Under default, she will get a refund. Whereas under optional, she has to pay more. Which is better? Default. Which is more beneficial? Default. Tell her. Please communicate to her. Okay, Mohan? Since there is tax refundable under default tax regime under section 115 BAC and tax payable under the regular provisions of the Income Tax Act 1961, it would be beneficial for Miss Purvi to pay tax under default tax regime under section 150 BAC. That's all. Lengthy question. It was, so we are done. Question number 4 done. Let us move to question number 5. 4 we will just. Yes. Question number 5. Mr. White carries on his own business. An analysis of his trading and profit and loss for the year ended 31st March 2025 revealed the following information. Okay, they have already given the data. They have not given P&L account, but the data. The net profit was 11,20,000. The following incomes were credited in the P&L account. That means because of the following items, incomes have gone up. Income from UTI, interest on debentures, winnings from horse race, all are given gross, but all these three are taxable under I, F, O. Yes. Correct. Yes. So what should we do? Already income has gone up. You have to deduct it. It was found that some stocks were omitted to be included in both the opening and closing stock, the value of which were, means the following was not recorded. Opening stock 8,000. Guys, opening stock is at par with expenses because we will debit it. So it is under recorded. What should we do now? Deduct 8,000. Closing stock is at par with income. We have not recorded 12,000 income. It is like that. Clear? What should we do? Add 12,000. Add 12,000. Next, 1 lakh was debited in profit and loss account, being contribution to a university approved and notified under section 35(1)(2). If it is optional, allowed. If it is default, reject it. Means block it. Salary includes 20,000 paid to his brother, which is unreasonable to the extent of 2,500. Unreasonable has to be disallowed. Where? 40A2. 40A2. Correct? If you pay unreasonable payments to your relatives, it is disallowed as per section 48(2). Okay. Advertisement expenses include 15 gift packets of dry fruits costing 1,000 per packet presented to important customer in the course of business. Allowed. Total expenses on car was 78,000. The car was used both for business and personal purposes. 3/4 is for business purpose. That means 1/4 is disallowed. 1/4 is disallowed. Miscellaneous expenses included 30,000 paid to A&Co, a goods transport operator in cash on 31st January 2025 for distribution of company's product to the workhouses. See the trap here. Okay, they try to mislead the student. Guys, cash payment is made to a single person in a single day of how much? 30,000. But for that is goods carriage. Okay, goods transportation operator. Actually, cash payment is disallowed if it is more than 10,000 as per section 48(3). But if the payment is made to a goods carriage operator, the limit is 35,000, not 10,000. 35,000. So, is 30,000 within 35,000? Yes, allowed. Allowed. Because if you don't know this 35,000 part, then you will disallow this. Clear? Please be careful when payment is made to a goods carriages. The limit is not 10,000, it is 35,000. Next, depreciation debited in books was 55,000. As per books, it will be as per Companies Act. What should you do? Disallow. Depreciation allowed as per income tax rules is how much? 50. What should you do? Allow it. Drawings of 10,000 debited in the books personal. Disallow. As per section 37. 37 tell no personal. Okay. Yes. Investment in NSC 15,000 debited in the books. ETC deduction. Compute the total income of Mr. Y for the assessment year 25-26 under optional tax regime as per the normal provisions of the normal provisions means which scheme? Optional scheme. Yes, sure. Come to the answer. Computation of total income of Mr. Y for assessment year 25-26. First, PGB. Done it by way of working note. Net profit is taken as the base, which they are given on the top, 11,20,000. Then make necessary adjustment. First adjustment was actually that incomes. Okay, remove them. Remove them. Okay, because it has already increased your income. Remove all three. All three are taxable under other sources. Clear? You can see all three would have been included in other sources. All three. Gross figures. No change. Okay. Next, coming to other adjustments. Expenses debited to P&L account but not allowable. Okay, all the expenses, whatever is debited, they are given. Okay, so should we allow it or not? We have to decide. If it is allowed, we will not touch it. We will not do anything. If it is not allowed, please add it back. If it is disallowed. Salary paid to brother, how much is unreasonable? 2,500. Only disallow that. As per section 4080. Next, motor car expenses, guys. 1/4 is used for personal purpose. So 3/4 is allowed, but 1/4 is personal. Please add back only that much. Only add back that much. Depreciation debited as per books 55. Add back that. But as per income tax, whatever is there, where they have allowed it. Here, deduct. Clear? Please show it separately. Some students will tell, sir, can I give net adjustment 5,000? Better. Okay, better show it separately. We are showing that this is as per accounts. This is not allowed in income tax. We will calculate separately as per section 32, read with rules, and we will allow it. Okay, so whenever they are given depreciation as per books or as per P&L account and all, guys, that is not as per income tax act. That will be as per accounts. Please disallow that. Okay, because under income tax act we have to follow WDV method and we have to follow the rates given in the rules. Clear? Yes. Sure. Drawings not allowed as per section 37. Investment in NSC, that is also debited. That is also debited. Sir, is it allowed as business expenditure? No, no. You can claim deduction. Clear? Because they are clearly given. Na? Assume all these are debited already. Whatever is given. Okay, an analysis of his trading and profit and loss account for the year ended revealed the following. The following incomes were credited and the other things which are already given here, guys, it is considered that, sir, already it is taken care in P&L account. Either debited or credited. Whereas this and all is omitted. They clearly told it is omitted. Got it? Omitted means not record. Oh, yes. Because you might get a doubt. Sir, why are you adding back all this and all? Guys, it is considered that all these expenses is already debited. So if it is allowed, don't touch it. If it is disallowed, please add it. Oh. Sure. Investment in NSC, we are disallowing it, but we will give it as a deduction. Then understatement of closing stock, we are adding. Hope you understood. Guys, closing stock, normally we will credit it. Alva, we have not recorded 12,000. That means my profit would have come down by 12,000. So what should you do now? Same way. Opening stock, we debit it. Opening stock, we debit, but we have not recorded 8,000. That means we have under recorded the expenses. Clear? Because opening stock is debited. That means it is at par with expenses. So what should you do? Deduct 8,000. Deduct 8,000. Then contribution to university, is it allowed, sir? Yes, don't take it. Already debited, don't do anything. Better give a note. Here they have done all this and mentioned nil here. Okay, instead of that, you can just give a note telling it is allowed. Correct, Nishan? Allowed, right? Other things and all I already explained. Okay, and whatever you are detecting, better put it in a bracket test. That is a right practice. Some notes are given. What is it? Advertisement expenses of revenue nature, namely gift of dry fruits to important customer, is incurred only and exclusively for business purpose. Is it allowed, sir? Yes, as per section 37, it is a general expenses are incurred for business purpose, hence allowed. Then this is also important note. Disallowance under section 48(3) is not attracted in respect of cash payment exceeding 10,000 to A& Co, a goods transport operator, since in case of payment made for flying, hiring or leasing goods carriages, an increased limit of 35,000 is applicable, not 10,000. It is 35,000. Dushyant, how much? You should look at me. 35,000 that is payment of up to 35,000 can be made in cash without attracting disallowance under section 40A(3). Pallavi, look here. Since drawings and investment in national savings certificate have been given effect in the profit and loss account, the same have to be added back to arrive at the business income, but allowed later under section 80C. Yes. In point number 8 of the question, they have given the depreciation. As per income tax rules, they have given the depreciation. It is assumed that they have taken depreciation only for business purpose. Clear? Because 1/4 of the car is used for personal purpose. Sir, have they considered it? We are assuming they have taken it. Clear? Yes. That is what they have given the note here. In point number 8 of the question, it has been given that depreciation as per income tax rules is 50,000. It has been assumed that in the said figure of 50,000, only the proportional depreciation, that is 75% for business purpose, has been included in respect of motor car. Why? Because 1/4 of the motor car is used for personal purpose. Even depreciation will not be allowed for. Clear? So whatever 50,000 figure they have given in the question, it is assumed that they have considered the personal purpose and ignored it and calculated depreciation only for business part. Got it? Yes. So other sources, we need to just add all three and take it. That's all. Okay, sure. So other sources, I already showed you 54,500. So gross total income is 11,76,000. Deduction under ATC, that is for investment in NSC, 15,000. So that will give you a total income of 11,61,000. I guess they have asked only total income and not the tax liability tax. That's all. Yes. Let us go to question number 6. Question number 6. Actually, the same question, I have done it in my question bank, but one small change is there. That is why I will do it again. The salary figure is different. Salary figure is different. So let us do it. Balamurugan furnishes the following information for the year ended 31st March 2025. That is previous year 24-25. Income from textile business, normal. Okay, income allowed, actually loss. They have given it in the bracket, you can see. 1,35,000 loss. Income from house property, again loss, 15,000. Whenever they give it in the bracket, it is a loss. You don't cancel out the bracket and consider it as income. Okay, because the word what they have used here is income, but here they have given it as bracket. Okay, or maybe mistaken. You will cancel the bracket and take it as income. Lottery winning, gross 5 lakh, other sources, casual income. Speculation business income, 1 lakh. Look at the beauty. Looking. Look at the beauty. You have speculation business income. You have normal business loss. Can you adjust it? Yes. But vice versa not possible. Speculation business loss, you cannot adjust it against other business income. But other business loss, can you adjust it against speculation business income? Yes. Income by way of salary computed. Don't give standard deduction and all. Already everything is taken care of. One. Please don't give anything extra. Okay. Long-term capital gain under section 112. Taxable at 20%. They only given. No confusion. Date and all. Don't worry. They only told 20%. 70,000. Compute is total income, tax liability, and advance tax obligation under default tax regime under section 115 BAC. Default advance tax obligation also they have told. Advance tax obligation will come only if the final tax to be paid after advance tax, if he has not paid any advance tax, but TDS would be there. After TDS, if still the amount to be paid is more than 10,000, only then advance tax liability will come. Yeah, yes, sir. Sure. Let us. Computation of total income of Balamurugan for the year ended 31st March 2021. Salaries 2,70,000. Loss from house property cannot be set off against income from any head. Clear? Why? Which scheme they are following? Default. If you have loss under the head house property, you can adjust it only within the same head. That's all. If you cannot, forget it. Sir, can I adjust against other heads? No. Can I carry forward? No. Please forget. Oh, asset. So straight away income from salary which is computed 270. Then profits and gains of business or profession. Speculation business income 1 lakh is there. Textile business loss which is normal business loss which is Mohan. Please look here. Okay. So 135 is the loss, but you can set up only to the extent of 1 lakh. Remaining 35. Can I set up against long-term capital gain? Yes. Here also different story. Please be careful. Current year business loss can be adjusted against any head except salary. Can I set it off against long-term gain? Yes. But long-term loss cannot be adjusted against any income except long-term gain. Clear? Can business loss, which is a current year business loss, be adjusted against long-term gain? Yes. Can we adjust against short-term gain? Yes. But capital loss cannot go outside that. If it is long-term loss, you can adjust it only against long-term gain. Short-term loss means short-term gain or long-term gain. Okay. So remaining 35, we are adjusting it here. So 70 minus 35. What is the net figure? 35. Take it to the outer column. Then lottery winnings, gross. Guys, please be careful. Against this, you cannot set up any loss. Any loss. You cannot claim any expenditure. You cannot set up any deductions. You cannot set up any loss. Clear? Against casual income. Fine. So what is the total income? 8 lakh 5,000. 8 lakh 5,000. Chala. Tax calculation. Tax calculation on total income. First, guys, in 8 lakh 5,000, take a breakup. How much is special? 35 also special, 5 also special. Correct. Now, special rates, taxable special rates, whereas normal income is 270. 270 is less than basic agency limit. Under default regime, what is the basic agency limit? 30. 3 lakh. Sorry, not 30. 3 lakh. Correct. Yes. Who is Balamurgan? Human being already. Resident. They didn't mention anything. Not. Sure. Residency status is not mentioned. On total income of 2,70,000. Guys, listen here. 2,70,000 is the normal income which is taxable at slab rates. No tax because it is less than basic agency limit. What is the basic agency limit under default scheme? 3 lakh. What is your normal income? 2.7 lakh. So there is a shortfall of how much? 30,000, which you call it as unexhausted basic exemption limit. Sir, can we set up this against long-term gain? Yes, provided assessee is the resident. Here, let us assume Balamurugan is the resident. I have mentioned that if question is silent, assume the assessee is the resident. So, can we set up this against long-term capital gain? Yes. How much is the taxable long-term capital gain? 35. Adjust 30. Remaining is how much? 5,000. Taxable at 20%. Taxable at 20%. Please be careful. This adjustment is available only for residents, resident, individual, and HUF. Okay. Yes. So, and lottery winnings straight away 5 lakh 30%. 1 lakh 50. Now, one more thing you might ask me. Sir, 30,000 you adjusted against long-term gain. Now, instead of adjusting that, can I adjust it against lottery winnings? No. It is available only against capital gain special income. Capital gain special income. Casual income will always be taxed at a gross rate of 30%. No adjustment against it. Okay. So 1,000 plus 150, 151 you will get. Health and education says 6,040. Final tax liability 157. Guys, from this you have to reduce TDS. How much is the TDS? Guys, on 5 lakh TDS would be deducted at 30%. Would be deducted at 30%. So should we reduce it, sir? Yes. Okay. This actually note is bit confusing. So let me explain it. Guys, see from this we need to reduce TDS. How much it comes to? 1 lakh 50. That is 5 lakh into 30%. Got it? So remaining is how much? 7,040. You need to pay. It is less than 10,000. No advance tax liability. No advance tax liability. Please don't take this figure. You need to reduce TDS and C. We call it as assessed tax or tax due. Okay, this is nothing but advance tax liability, guys. Okay, it is less than 10,000. Should we pay advance tax? No, sir. Can I pay it as self-assessment tax? Yes. And as assessor is not liable to pay advance tax, if he has not paid it, will interest be levied under section 234B or 234C, which is for advance tax non-payment or short payment? No, sir. Because this is less than 10,000, assessor is not at all liable to pay advance. Is that clear? Yes. If by chance the final figure, whatever I showed here, if it was more than 10,000, if it is not paid before 31st March of previous year, then assessor is liable to pay interest under section 234B and 234C. Clear? Yes. But here, in this scenario, no advance tax. Simple. No advance tax. That's okay. Better. What I suggest is better show the TDS. Because here they have given the int, you can see. Lottery winnings, what is given in the question is gross. That means TDS should have been deducted at 30%. Please reduce. Got it? Yes. Yes. Let us go to question number 7. Mr. Raji, age 50 years, a resident individual. Somewhere it may play a role. And a practicing chartered accountant furnishes with the receipts and payments account for the financial year 24-25. They are given receipt and payments account. Okay, sir. Let us see receipt side first. Opening balance of cash and bank guys 12,000. Fee from professional services gross 59 lakh 38,000. Rent 50,000. Motor car loan from a Canara bank. It is a loan, not income. Okay, please be careful. 2 lakh 50,000. And you know, in receipts and payments account, all receipts would be recorded. Whether it is revenue receipts or capital receipts will be recorded. Same way on the payment side, whether it is capital payments or revenue payments, it would be recorded. You need to segregate properly. Clear? Is this a income actually? Loan from bank to? No. Coming to the payment side. Staff salary, bonus and stipend to article clerks. Other administrative expenses. Office rent. Housing loan repaid to SBI. 188, but interest is 88. Clear? Interest separately allowed and principal amount, where is it allowed? 1 lakh is principal amount, 80C. 80C, principal repayment of housing loan, 80C, whereas interest, house property. Clear? Yes. Here the rent is also there. That means he will have an income from house property. Life insurance premium, 24,000. 10% of the sum assured. That means it is within the limit. Here, as on today, policy is taken. What is the maximum premium allowed as deduction? 10% of the sum assured. Clear? Here they have given 80C deduction. Motor car acquired in January 2025 by account pay check 4,25,000. Okay, guys, this is not a revenue expenditure. Depreciation can be claimed, but that to 50%. Why? Acquired and put to use for less than 180 days. When it was purchased? Jan. Correct? Put to use for less than 180 days. Medical insurance premium for self and wife paid by account pay check 18,000. 80D deduction. 80D. Allowed? Yes. Books bought on 1st July 2024. Chartered Accountants Day. Hey, Vella nodre, you should feel special control. 1st July, Chartered Accountant Day. You are aware, no? You should celebrate this day as early as possible. Annual publications by account pay check 20,000. 20,000. Is it allowed as revenue or capital? Capital. On this, depreciation can be claimed. Depreciation can be claimed. Yes. Computer acquired on 1st November 2024 by account pay check 30,000 for professional use. Okay, 1st November. Again put to use for less than 180 days. Clear? I have given 4th October as a standard date. Anything after that, sir, 180, less than 180 days. So even on this 50%. 50% means whatever is the depreciation rate, on that 50%. Don't take depreciation rate only 50%. Domestic drawing disallowed. Public Provident Fund, 80C deduction. Motor car maintenance allowed. Closing balance of cash and bank, 19 lakh 15,000. Oh, some adjustments are also there. Following further information is given to you. He occupies 50% of the building for own residence and let out the balance for residential use at a monthly rent. Okay, whatever house is there, 50% is self-occupied. Another 50% is let out for a monthly rent of 5,000. The building was constructed during the year 97-98. Obirai Kala. When the housing loan was taken, see that question. For self-occupied property, whatever loan is taken, what is the maximum interest allowed? 30,000. Because 2 lakh is allowed only if the loan is taken on or after 1st April 1999. That is the India. Okay, so 50% is self-occupied, 50% is let out. For 50%, what is the rent? 5,000. You will start with GAV. Whereas for self-occupied, straight away you will go and eat interest. Okay, what is the interest part? Hello, 88,000. In that half is for self-occupied, 44,000. Is entire 44 allowed? No, restricted to 30. Understood now? Yes. Sir, what about the let out property? 44,000. For like 40 to let out property, 44,000. Is full allowed? Yes. No limit for it. Yes. One more twist you see. Rent what they have given for let out portion is 5,000 per month. But what is mentioned here is 50,000. 5,000 per month. 5,000 per month will come to 60,000 per annum. 60,000 per annum. Correct? Yes. But what they have given here is 50,000. Hey Rahul, how much is given here? 50,000. But how much GAV will come to? 60,000. Allu in one there. Clear? Yes. See, all these are hidden information. You have to pick it. Correct, Tejaswini? 5,000 into 12 will be how much? 60,000. But what they are given as receipts? Only 50,000. Means rent due is 60, but what is received is 50. Motor car was put to use for both for official and personal purpose. 1/5 of the motor car is used for personal purpose. No car loan interest was paid during the year. Okay. So when it comes to expenses on motor car, only 4/5 is allowed. 1/5 is disallowed. The written down value of the assets as on 1st April 2024 are given below. Furniture and fittings 60,000, 10% depreciation. Plant and machinery 80,000, 15%. 15%. Air conditioner, photocopies of photocopiers, etc. Computers 50,000. Okay, 40% depreciation. One more thing, guys, all these are opening value. Plus, some purchases are also there here. Alva, motor car, books, computer, is purchased. On that also, can we claim depreciation? Yes, asset acquired and put to use during the previous year. But for that, please check less than 180 days or more than 180 days separately. Yes. And for this, should we check 180 days? No, Baba, it is already there on the opening day. Okay. Obviously, you would have used it for full year, more than 180 days. Correct, Mohan? Yes. Sure. Mr. Rajiv follows regularly cash system of accounting. He's following cash system of accounting. Can he follow the same for income tax purpose also? Yes. Compute the total income of Mr. Rajiv for the assessment year 25-26, assuming that he has shifted out of default tax regime. Means he is following optional scheme. Optional scheme. Okay, sir. Let us begin. Income from house property, as two houses are there, separately you consider 50%, 50%, 50% self-occupied. For self-occupied, straight away go and eat only interest because GAV will be 0. Yes, sir. So 50% of total interest comes to 44,000, but it is restricted to 30,000. Have they given a note for it? Just a minute. No note. Better you mention that. Okay, na? Better you mention. What is that? As loan is acquired before 1st April 1999, the maximum interest allowed as a deduction for self-occupied property is restricted to 30,000. Clear? Yes. So loss from self-occupied property is 30,000. Coming to let out property, look at the beauty here. Look at the beauty. One twist, guys. Many students might miss out this point. Listen here. Gross annual value is how much? 5,000 into 12. So should we take the rent receivable? Yes. So rent receivable has been taken as annual value in the absence of other information. But received is how much? 50,000. Assess is following which basis? cash. So should we take what is received or what is accrued? Received. But again, one twist, important tax is following cash basis. But as per income tax, only while computing the income under the head PGBP and other sources, you are free to follow whatever is following in accounts. In your accounts, if you are following cash basis, you can follow even for income tax cash basis, but only for 2 years, which are the PGBP and other sources. Now where are we? House profit. So should we follow that cash basis? No. Hope you understood. If you take 50 year gone, gone is not entire question. At least that adjustment will go for a toss. Okay. Yes. So 60,000 you consider it. Okay, sir. Deduction. Municipal tax paid and all they are not given. So straight away 24 deductions we are giving. 30% of NAV and interest on housing loan, which is 50% of 88,000. So claim 62,000. So here you have a loss of 2,000. So what is the total house property loss? 32,000. Current year house property loss. Can it be adjusted against other rates? Yes. Assessee is following with scheme. Optional scheme. PGBP. Okay. Fee from professional services. Now which scheme should we follow? Cash basis or accrual basis? Cash basis. Okay, sir. In that case, fees from professional services is given 59,38,000. Expenses allowable as deduction is given. What and all? Whatever is allowed, you deduct. Here we are not taking profit because it is given as receipts and payments account. Where is profit there? I cannot take that as a basis. What are they doing here? Guys, please be careful. Different level of question this is. Okay, we are taking this as a base. Okay, sorry. This one as a base and making necessary adjustments. Clear? Because we don't have any profit or loss to take it as a base here. Because what is given in the question is receipts and payments account. It will start with opening balance and end with closing balance. It will not show any profit or loss. Agree, na? Yes. So simple. What are we doing, sir? We are taking this as a base. Whatever is allowed, deduct. Whatever has to be added, add. Ashti. Clear? Yes. One by one. Expenses, better you underline this. Expenses allowed as deduction. Staff salary, bonus and stipend allowed. Other administrative expenses allowed. Office rent allowed. Motor car only 4/5. 1/5 is personal, na? Only 4/5. Guys, please be careful. We are not disallowing. We are allowing. So please take care of what is allowed. Clear? I told you because we don't have profit. I cannot start with profit here. Hope you are getting it. Clear? I took fees as a base and I am allowing whatever is allowed as per income tax. I am deducting it. Okay. Motor car maintenance 10,000 into 4 by 5. Car loan interest not allowable since the same has not been paid. Guys, they have tried to mislead you. You can see here. Loan is taken 2,50,000. What is the interest rate? 9%. On the payment side, have they given any interest to? No, that is not paid. Accrued but not paid. Will you take it? No, cash basis. No. Clear? Cash basis. If it was accrual, I would have taken maybe. But please be careful. See, listen here. They are given loan amount and interest rate. Some students by mistake they may take 2,15,000 to 9% as an expenses. No, cash system. If they had given it here, yes, we would have taken because it is paid. But they are not paid. Okay, maybe it is accrued but not paid. So we will not take it. Yes. Sir, next year if they pay interest for this year as well as next year, can we claim both? Yes, cash system. Oh, next, depreciation. And one more doubt here also. Sir, as assessor is following cash system, depreciation allowed, huh? Yes. Because depreciation is non-cash expenses, no? Can we claim depreciation? Yes, actually I will. Because 32 tells depreciation is a mandatory claim. Is a compulsory claim gas. Even though assessor is following cash system, still he can claim depreciation. On motor car, guys, as it is used for less than 180 days. Which motor car, sir? This motor car I am talking about. Acquired in January, 4,25,000. So 15% into 50% into 4 by 5. 4 by 5 why? Only office purpose. 1 by 5 is personal, no? So we are claiming only 4 by 5. You can see here. Here they have taken straight away 7.5%. How did we get it? 15% into 50%. Got it? Yes. Yeah. Motor car. Done. Next, books being annual publication on books 40% tax. Then furniture and fittings opening value is given 60,000 into 10%. Plant and machinery opening value is given 80,000 into 15%. Books actually when it was purchased? 1st July. So more than 180 days. More than 180 days. Computer 40% on 50,000, 20,000. Computer newly. See, computer both are there. Opening also is there. Plus, here it is also purchased. When? 1st November. Less than 180 days. Less than 180 days. Okay. So 40% into 50%. Yes. See, here they have taken actual depreciation rate and into 50%. Whereas here straight away they have done net off. Don't do like that. Consistency should be there. Okay. Yes. Here also better show 15% into 50%. Guys. Okay, sir. Then coming to deductions. So gross total income we have got 24,92,500. Then deductions under chapter 6A. For principal repayment of housing loan, deduction is given under section ATC 1 lakh. PPF subscription, that is public provident fund, 20,000. Life insurance premium 24. Total comes to 144 within the limit, no problem. Maximum deduction under section ATC is 1 lakh 50. Is it within the limit? Yes, give it. Then deduction under section 80D, medical insurance premium paid, allowed? Yes, full 18,000 allowed. So what are the total deductions under chapter 6A? 1,62,000. Put it in bracket. So what is the total income? 23,30,500. 23,30,500 is the total income of the assets. Thus, they have asked only the total income. Yeah. Question number 8. Question number 8. From the following details, compute the total income and tax liability, both they are asking, of Siddhant, age 31 years, doesn't matter, of Delhi, both as per 115 BAC, that is default scheme, and as per the regular provisions of the Income Tax 1961. Regular provisions means optional scheme. For the assessment year 25-26, advise Mr. Siddhant whether he should opt for section 115 BAC or not. Actually, opt for Allah. It is default. If he doesn't want, he can opt out of default and follow optional. Correct? Yes. Means you need to suggest them. You need to recommend them. What? Which is beneficial. Wherever the tax liability is lower, you suggest it. Salary including DA 4,35,000. Bonus 15,000. Salary of servant provided by the employer 12,000. Domestic servant. Is it taxable? Yes, as per Quizit. Hey Nitin. That is why you have kept the window open. Rent paid by Siddhant for his accommodation. Is seeing someone there. 49,600. Bills rent paid by Siddhant for his accommodation. Please be careful. He is paying it, not employer. If employer pays it, then it becomes a perquisite. Clear? Yes. And nowhere they have told here that employer provided it. Clear? So is it a rent-free accommodation? No. Clear? Let us see what else is given. Bills paid by employer for gas, electricity, and water provided free of cost at the above flat. Okay. Facilities is given free of cost. To whom? Employee. Who is paying the bill? Employer. Papa. 11,000. Is it a perquisite in the hands of employee? Yes. Siddhant purchased a flat in a cooperative housing society in Delhi for 4,75,000 in April 2016, which was financed by a loan from Life Insurance Corporation of India of rupees 1,60,000 at 15% interest. You need to consider interest on loan. Okay. His own savings of 65,000 doesn't matter. And a deposit from National Bank of 2,50,000. Okay, doesn't matter. He has got some amount out of his own savings or deposit. Okay. Because for this and all, interest is not allowed. To whom? Now you see. For a national bank, to whom this flat was given on lease for 10 years. The rent payable by the bank was 3,500 per month. Actually it is not lease, because guys, lease and rent is a two different words actually, which we use in the real estate sector. Clear? Lease means you would have given a refundable security deposit. Clear? Rent means, sir, every month the tenant has to pay rent to the owner, not landlord. Clear? But here they have used the word lease. Fine, no problem. Per month rent is 3,500. So property is let out. Property is a let out property. On that, whatever interest is there on this loan, can we claim it, sir? Yes. The following particulars are relevant. What are those? Municipal taxes paid by Mr. Siddhant, owner, allowed? Yes. House insurance 860 allowed? No. All this will come under 30% standard deduction. Yes. He earned 2,700 in share speculation business. Speculation. And lost 4,200 in cotton speculation business. I told na. Ashit, you asked. Okay, sir, how do you know that loss only more? Okay, gain in 1 day, loss in 4 days. It will be the story like that in case of speculation. Okay. So there is a gain 2,70,000. Sorry, 2,700, loss of 4,200. Sir, can we adjust this against this? Yes. Remaining carry forward. Can we adjust it against any other income? No, not possible. In the year 21-22, he had gifted 30,000 to his wife. Wow. And 20,000 to his son, who has aged 11 years, minor son. Minor. Okay. The gifted amounts were advanced to Mr. Rajesh, who was paying interest at 19% per annum. Clubbing provision. Clubbing provision. Clubbing andre disco alla kano. Clubbing of income. Clubbing for CA students means different. Clear. For others different. Okay, Pawan, for you clubbing means what? Clubbing of income. Whose income? Spouse or minor children. Okay. Sir, whatever spouse, that is wife, is earning on 30,000, is it to be clubbed? Yes. And whatever minor children is earning 20,000, it is not out of their efforts. So should it be clubbed? Yes. Siddhant received a gift of 30,000 each from four of friends. 30,000 each, not from all four put together. So 30,000 into 4, more than 50,000. Is it taxable? Yes, IFOS. As per section 56 to 10. He contributed 50,000 to PPF, that is Public Provident Fund, deduction under section 80C. Oh, easy question. Okay. Here the main target is actually on salary. Yes. Salary income. Underline. Or you write income from salary. Salary including DA 435. Bonus 15. Value of perquisite. Salary of servant, free gas, electricity, and water 11,000. Total perquisite comes to 23,000. Guys, one thing you have to be careful. See, here you might also get confused with rent free accommodation. Nowhere in the question they have told that employer provided the accommodation. Siddhant is paying a rent for it. That means he is paying by himself. Clear? Because later they give, there is a free gas, electricity, water provided to the above. Only free gas, electricity, water is provided by employer. House is taken care by Papa Siddhantan. Clear? Yes. Standard deduction under default regime. We are following default regime first. Default. Okay, now what is the standard deduction under default regime? 75. Yes, sir. So income from salary is 3,98,000. Then coming to income from house property, GAV, straight away whatever rent is there is taken as GAV, 3,500 into 12. Municipal tax paid, is it allowed as deduction? Yes, 4,300. Net annual value, 37,700. From that, 30% of NAV you claim, and one more is interest. LIC loan. Okay, so 1,60,000 into 15%. Yeah, is it allowed, sir? Yes. For that, they have given a note, it seems. What note we will see. Yes, it is assumed that the entire loan 160, yeah, it was taken somewhere in the past, they have not given anything about repayment. So we have assumed that entire 1,60,000 is still outstanding. So loan interest is calculated on entire 1,60,000. Okay, sir. One more note is given. Guys, as Siddhant has a own house in the same place, can he claim deduction for rent paid under section 80GG? No. One of the condition under section 80GG is if you have a own house in the same locality, then deduction is not given for the rent paid under section 80GG. Okay, you might be actually paying it, but still no deduction. Still no deduction. So no 80GG deduction for Siddhant. That will actually come only under optional because under default, anyway, everything is blocked. Correct? Yes. So income from house property is coming to 2,390 after reducing all the steps. Then income under the head PGBP. This is PGBP head. Better give the heading as PGBP. Don't use short form, write full form. Profits and gains of business or profession. Under that, income from share speculation business 2,700. He has suffered a loss from cotton speculation business. How much, sir? 4,200. But you can adjust it only to the extent of 2,700. So adjust. Remaining is nil. Yeah, outer column you will take nil, but whatever is the remaining loss, you can carry forward. For how long, sir? Next 4 years. Okay, can I adjust it against any other income? No. Speculation business loss can be adjusted only against speculation business income. But sir, here you adjusted it against other business. No, both are speculation only. Clear? Sir, can loss from one speculation business be adjusted against income from another speculation? Yes, it is fine. But you have to adjust it against only speculation business income. Okay. Next, income from other sources. What are those? Income on account of interest. Okay, clubbing will always happen under which head? Other sources. Whenever I am supposed to pay tax for someone else's income, it will be included in my total income under which head? Other sources. So, income on account of interest earned from advancing money gifted to his minor son is includable in the hands of Siddhant as per section 64 subsection 1A. But whenever the income of minor child is clubbed, there is an exemption available under section 10 clause 32, but that is blocked under default scheme, not available. So straight away, how much is the income? 3,800. How did we get it? How much is gifted to son? 20,000 into 19%. Into 19%. Clear. Entire previous year we are taking because the money was gifted in 21-22. Clear. So assume that the interest is earned throughout the previous. Clear. We are concerned only about what is earned during previous year. Okay. Same way for wife, 30,000 into 19%. Will that also be club? Yes. For spouse income, 64-1. For minor child, 64-1A, junior. Okay. Yes, 1A. Okay. So for spouse, 64-1. How much, sir? Whatever is the amount, 30,000 into 19%, which comes to 5,700. Okay. Sir, even gift is taxable. This is in the own hands of Siddhant because he has received the gift. How much? How much is the gift? Four friends are giving 30,000 each. So 30,000 into 4, 120. Fully taxed. Don't see individually. Aggregate. Is it more than 50? Yes. Entire thing is taxable. So income from other sources is 1,29,500. 1,29,500. Yes. So gross total income is 5,29,890. 5,29,890. No deductions under chapter 6A. Why sir? Because the assets is following default scheme. So total income is also same. Clear. So should we do tax calculation also? Yes. Under default scheme, what is the basic assets limit? 3 lakh. So up to 3 lakh nil. They have not shown that, but up to 3 lakh nil. 3 lakh to 7 lakh how much? 3 lakh to 7 lakh how much? 5%. Correct. So how much is that? Sir, only 529 is there. Stop it there. 3 lakh to 529. What is the difference? 2 lakh 29, 890 on that 5%. On that 5%, which comes to 11,495. Hope you're understanding that. They are not shown that step, but better you show to 3 lakh nil. 3 lakh to 5 lakh 29, 890. What is the difference? 2 lakh 29, 890 into 5%. Clear? Yes. Is rebate available? No, sir. Sorry, this is default. Yes. Under optional means 5 lakh, whereas under default up to 7 lakh. The rebate is available. So how much? 25,000 or actual gross tax liability, whichever is lower, full claim. So 11 lakh 495 or 25,000, whichever is lower, put it in bracket. So final tax to be paid is nil under default. Let us see under optional now. Normal provisions, regular provisions, optional, everything is one and the same. Gross total income, we are taking same as a base. Is there any change here? 1 second. Here 75 will become 50 there. Correct. One change. Next, any other change? Yes, here 1,500 exemption will come. Clear. Under default it was not allowed, whereas under optional it is allowed. These are the two changes before gross total income. Correct. So you will take this as a base and make two adjustments. Okay. Yes. So gross total income as per default scheme is taken as a base. There 75 is allowed as deduction, but under optional scheme, how much is allowed as standard deduction under salary rate? Only 50. So extra 25 is already claimed. What do? Add it back. Then 1032 exemption is available under optional scheme. Whenever the income of minor child is clubbed, what is the exemption available under 1032? Simple. Sir, actual income club or 1,500 per child, not per month, per child per annum. 1,500, whichever is lower. Whichever is lower. So what was the income clubbed here? 3,800. So 3,800 or 1,500, whichever is lower, 1,500. Easy to remember. Income of a minor child will be clubbed as per which section, guys? 64, 1 year. Clear? There is a government policy telling V2 hours 2 anta. V2 hours 2. So divided by 2. How much you will get? 32. Okay, exemption is available under section 1032. Correct? Yes. And exemption is not limited to 2 children. Please be careful. Now, I had 10 children. Illa, ಹೇಳ್ತಾರೆ. Assume I have 10 minor children. All 10 children's incomes are clubbed with me. Everyone have FD interest. Clear? Now, how much exemption I can claim? For each child, income club or 1500. Illi limit illa. Because for clubbing, they are not putting any limit. So, exemption also, there is no limit. Clear? Yes. But only to remember the shortcut I told you. Okay, 64 divided by 2 is 32. So exemption is available under section 10 clause 32. Pawan, are you enjoying? Huh? Yes, sir. ನಾನು ಜೋಶಲ್ಲಿಲ್ಲ ಏನ ನೀನು 1500. You know what all you have to do in life, man. So many things are left. Okay, you are already like half dead. It's, huh? Come on, Pawan, you should have that Josh. Huh? Gross total income under optional scheme is how much? 5,53,390. Deductions under chapter 6A. Only one deduction is there. But that is contribution to PPF. 80C. How much, sir? 50,000. Claim. Total income is 5,03,390. Just to miss. For what? Rebate. Clear? Guys, please be careful. When total income is within 5 lakh, that is up to 5 lakh, under optional scheme, assessee is eligible for a rebate. If it is 1 rupee more, 10 rupees more, no rebate. Thank you. Whereas under default, they have brought something similar to marginal relief. Even if your total income is more than 7 lakh, but up to 7,22,290, you are still eligible for a rebate. You are still eligible for a rebate. That calculation is not there under optional. If your total income is 5 lakh 1 rupees, 5 lakh, are you eligible for a rebate under optional scheme? No. You have to pay tax from where? 2 lakh 50. Not only on 1 rupee, from 2 lakh 50. Clear? Yes. Tax on total income. Okay, up to 2 lakh 50 nillo. Up to 2 lakh 50 nillo. 2 lakh 50 to 5 lakh 5%. So 2 lakh 50 into 5%. Yes, 12,500. Okay. And on the remaining 5 lakh to 10 lakh, it is 20%. How much it is? Only 3,390. In excess of 5 lakh. On that 20%. Oh, they've added both and taken 13,178. But I suggest guys, please show stepwise. Okay. Yes. Then no rebate here. Why, sir? Total income is more than 5 lakh. So health and education says 4%. So tax liability comes to 13,705. Round it off to nearest 10. 5 or more next to 10. So 710. Oh, they have given some notes also. We will see. Since his total income as per the normal provisions of the Act exceeds 5 lakh, he would not be eligible for rebate under section 87A. Oh, Siddhant, under optional scheme. Since Mr. Siddhant is not liable to pay tax under default tax regime under section 115 BSC, which is beneficial, it would be beneficial for him not to exercise the option of shift out of default tax regime. Means which is beneficial to follow? Default. Why is that? Because the tax liability is nil, whereas here it is positive. Positive 13,710. So which is beneficial means whichever is lower tax, that is default tax regime. Yes, question number 8 done. Next is 9. Ramdev, aged 33 years, working as manager, sales with Frozen Foods Limited, provides the following information for the year ended 31st March 2025. Okay. Basic salary 15,000 per month. DA 50%. Sorry, DA is 12,000 per annum. 50% of it is meant for retirement benefits. So while calculating few exemptions, we need to take only 50%. See, taxable is full 12,000. But while calculating few exemptions, they would have told DA only forming part of retirement benefits. So for calculating exemptions, we should take only 6,000. Hope you are getting it. Okay. Yes. Commission as a percentage of turnover of the company 0.5%. What is the turnover of the company? 50 lakh. Guys, please be careful. Here, turnover is given 50 lakhs and commission is paid as a percentage of turnover. So can I tell? Commission is expressed as a fixed percentage of turnover? Yes. If you have seen few exemptions, they would have told You should include commission in the salary only if it is expressed as a fixed percentage of turnover. So in this case, should we include commission in the salary calculation for claiming exemptions? Yes. Clear? Hope you remember. See, in salary aid, in few places, to calculate the exemption amounts. Clear? Salary means what? Basic pay, always. DA, only if it is forming part of retirement benefits. Clear? Yes. And commission is only if it is expressed as a fixed percentage of turnover. Clear? So for this question, assume if they have asked you to calculate any exemption or even the employer contribution to RPF and all, okay, that is there in this question. We need to take what and all? DA fully, sorry, basic pay fully, DA only 50%, whereas commission you consider. Okay. Sure. Next, let us know. Bonus taxable, gratuity 30,000. See guys, for gratuity and all, exemption can be claimed provided it is received at the time of retirement. But in the question, nowhere they have given the prompt in retire. So that means this gratuity is received during the employment, yes, fully taxed. If it is received at the time of retirement or death, exemption is available under section 1010. Yes. Yeah, but here not available. Let us just a minute. Let us see whether somewhere have they given that he is retired or not. If he is retired, yes, we can claim it. But if he has received it during the employment, it is fully taxed. Oh. Own contribution to RPF. Own contribution means employee contribution, guys. 30,000. Employer contribution to RPF. 20% of basic pay. Okay. But exemption is available for 12% of salary. What is 12% of salary? Basic pay plus DA, forming part of retirement benefit plus commission, if it is expressed as a fixed percentage of turnover. Okay. Interest credited in recognized provident fund account, 15% per annum, 15,000. But how much is exempt? Only 9.5%. Remaining 5.5, is it taxable? Yes, it is taxable. Remaining 5.5 is taxable as. Gold ring worth 10,000 was given by employer on his 25th wedding anniversary. Not marriage, anniversary. And moreover, employer is giving it. When employer is giving it, it is covered under salary and not other sources. Clear? Yes. Value of the gift is more than 5,000. Fully taxable. Fully taxable. Music system purchased on 1st April 2024 by the company for 85,000 and was given to him for personal use. Asset purchased by the company, employer, and given for employee to use. In that case, it is given for usage, not sold. In that case, we need to take 10% of this as purchased. 10% of the cost of the asset class. Yeah, yes. Next. Two old light goods vehicles owned by him were leased to a transport company against fixed charges of 6,500 per month. Books of accounts are not maintained. Guys, this is not under salary head. Okay, all other information was given under salary, but this is different. Sir, where is it? PGBP. Clear? And he is having two light goods vehicle, which is less than 10. And he is not maintaining the accounts. That means they have given you some hint. What is it? Presumptive taxation. Presumptive taxation under which section? 44 AE. AE for goods carriage business. So for light goods vehicle, not heavy goods vehicle, light goods vehicle, what is the income? 7,500 per vehicle per. So two vehicles are there. So 7,500 into 2 into 12. Got it? Yes. Guys, this is the hint for you to decide whether it is presumptive or not. Clear. They have told clearly books are not maintained. Books are not maintained means assessor is following what presumptive schemes, because there are totally three presumptive schemes: 44 AD, ADA, AE. AD is for any business other than goods carriage. ADA is for professions. AE is for goods carriage. Correct? If you are following any of these presumptive schemes, then you need not maintain books of accounts. You need not get it audited. Illa, if you pass ಕೆಮ್ಮುದ್ರೆ extra ಕೆಮ್ಮುದ್ರೆ ಅಂದ್ರೆ ಏನು? Sir, I am telling no, my income is less than this. Then maintain books and get it audited. Prove it. Alva, if you are claiming your income is less than presumptive, please maintain the books, please get it audited. Got it? Yes. ಅಷ್ಟೊಂದು ಮುಂದೆ ಹೋಗಬೇಡ. I just explained little extra. For this, we need to consider income under section 44 AE under the head PGBP. How much? 7,500 into two vehicles into 12 months. Got it? Asked. Received interest of 5,860 on bank FDRs, that is fixed deposit receipts, guys, on 24th April 2024, and interest of 6,786 net to, means after TDS, from debentures of Indian companies on 5th May 2024. Guys, listen here. They have mentioned net and here also they have given received. That means it is after TDS. So while calculating the income, should we take after TDS or before TDS? Before TDS, cross figure. How to do it, sir? On interest, TDS rate is how much? 10%. So cross it. Whatever you have received is 90% of what you have earned. Correct, huh? I repeat. Whatever you have received is 90% of what you have earned. Why, sir? 10% TDS. 10% TDS. So how do we calculate it, sir? Divided by 90%. That's all. How did you get 90%? 100 minus TDS rate. 100 minus TDS rate. On interest, what is the TDS rate? 10%. Okay, sir. Sure. Made payment by checks of 15,370 towards premium on life insurance policies, ATC deduction, and 22,500 for mediclaim insurance policy for self and forth, ATT. This is ATC and this is ATT. Invested in NSC, ATC, and FDR, that is FD of SBI for 5 years. Condition is minimum 5 years. Okay, now can we claim for FD? Yes, ATC. Minimum condition is 5 years. Okay. Donation of 11,000 to an institution approved under section 80G. This is the headache actually. And 5,100 to Prime Minister National Relief Fund were given during year by way of check. 80G deduction is available, but we need to check few things under which category it will fall under. Okay, there are totally 4 categories: A, B, C, D category. A category 100% allowed as deduction without any limit. B category 50%. C category 100% subject to limit. C, D category 50% subject to limit. What is that limit? 10% of adjusted total income. What is adjusted total income? Cross total income. Reduce all deductions under chapter 6A from ATC to ATO except ATG. Except ATG. And if there is any capital gain special income, you need to see, please be careful. Capital gain special income only they have asked you to remove. If gross total income includes any capital gain special income, you need to remove it. Clear? I don't think this assessee has any capital gain special income, so you need not worry about it. Okay, sir. Compute is total income and tax payable thereon for assessment year 25-26. Assume that Mr. Ramdev has exercised the option to shift out of default tax regime under section 115 PAC. Means he is following which scheme, guys? He is following optional scheme. He has exercised the option to shift out means, so he is following optional scheme. Oh, let us see the answer. Computation of total income of Mr. Ramdev for assessment year 25-26 under normal provisions of the income from salaries, basic salary 15,000 into 12, which comes to 1,80,000. Guys, nowhere in the question they have mentioned about retirement. Assume that he is working for entire 12 months during the previous year. Okay. Dearness allowance 12,000 into 12. Okay, here you take full. Only while calculating exemption, you need to consider 50%. Yes. Commission on turnover 50 lakh into 0.5%, 25,000, fully taxable. Bonus 50,000, fully taxable. Gratuity, fully taxable. They have mentioned a note. Let us see the note. Gratuity received during the service is fully taxable. Okay, sir. Next. Employer contribution to recognized provident fund. Actual contribution is how much? 20% of basic pay. How much is exempt, guys? 12%. 12% of salary as per section 10 clause 12. 10 clause 12. Yes, sir. They have done the calculation in the note itself. Let us see. How much is exempt, guys? 12% of salary, which is basic pay plus DA, forming part of retirement benefit plus commission based on turnover. If you take everything, basic pay fully, DA only 50% for claiming exemption, whereas commission fully, take 12% of it, which comes to 33,240. 33,240. And please be careful here. Only whatever is forming part of retirement benefit you have to take, which is 50%. Yeah, yes. So 33,240. 33 to 40. Remaining is taxable under that salary. For employee's contribution, deduction is available under section 80C. Employer taxable under salary head, exempt up to 12%. Remaining will be taxable. Then coming to interest. Interest is exempt up to 9.5%. 15% is received for 15,000. How much for 9.5 you can calculate? How much is, sir? 15 divided by 15 into 9.5. Remaining is taxable, which is 5.5%. Yes. Gift of gold ring worth 10,000. As it is more than 5,000, gift is in kind. Is it taxable, sir? Yes, entire 10,000 is taxable. There is also an alternate view, Chinmayi. Okay, as per law, actually, if it is more than 5,000, fully taxable. But there is a circular telling if it is more than 5,000, tax only the difference, additional part. Clear? But I suggest in the answer you follow whatever is given in the law. That is more than 5,000, full tax. Clear? But this you can give it as a no. What is it, we will see. An alternate view possible is that only the sum in excess of 5,000 is taxable in the view of language of circular number 15/2001 dated 12th December 2001. Sir, will we know all this? You need not mention circular number, date and all. Clear? Yes. Just give a note telling if it is more than 5,000, alternatively, only the excess part can be taxable. That such gifts up to 5,000 in aggregate per annum would be exempt, beyond which it would be taxable as perquisite. As per this view, the value of perquisite would be 5,000. In such a case, the income from salary would be accordingly changed. Okay, now? Yes. So we have taken entire 10,000. So this is the right view, go with this. When the value of the gift is more than 5,000, entire value is taxable. Next, perquisite value of music system given for personal use. Employer has purchased it and given to employee to use it. So take the 10% of cost. 85,000 into 10%, which comes to 8,500. Next, you got the gross salary. We call this as actually gross salary, better to show it. Gross salary, 4,55,760. Standard deduction under optional scheme is 50,000. Remaining is 4,05,760. 4,05,760. Oh. Next, coming to PGBP, that is for letting out that goods vehicle. Okay, goods carriage. Lease of 2 light goods vehicle on contract basis against a fixed charges of 6,500 per month. In this case, presumptive tax provisions of section 44 AE will apply. That is 7,500 per month for each of the 2 light goods vehicle. So income comes to 7,500 into 2 into 12, 1,80,000. He cannot claim lower profits and gains since he has not maintained books of accounts. Now you might tell me, says he is actually earning less than that. No, yes, he can disclose that, but he has to maintain books of accounts. He has to maintain the books of accounts, guys. Next, income from other sources. Interest on bank FD 5,860. Interest on debenture, you can see they have told net of TDS. So what we have done? Divided by 90%. How did we get 90%? TDS rate is 10%. So 100 minus 10%. Yeah. And actually here also they have told received interest on FD. Clear? So there also you can assume it is before, after TDS. After TDS, because they have used the word received. 1 second. Where is it? Received interest. Clear? But what they have done is only here they have given net. Here they didn't mention net. So that is why what they have considered is this is the gross figure straight away, no TDS on this. Whereas when it comes to this, have they deducted the TDS? Yes, because they have given the interior net. Is that clear? Yes. And please be careful, bank will deduct TDS only if threshold limit is crossing 40,000. 40,000. And here it is less than 40,000. Maybe that is why they have ignored the TDS. Clear? Because the interest is not more than the threshold limits, hence no interest. Sorry, no TDS. No TDS. Yes. So gross total income is 5,99,160. So deductions under chapter 6A, first ETC. And whenever you are presenting deductions, try to present in the section order. For example, don't bring ETG first, then ETC like that. Go in the order. Yeah. And every section they would have not given in the question. Whichever sections information they have given, Try to present it in the alphabetical order. However you have learned. You would have also learned in the alphabetical order. Correct, na? ATC, premium on life insurance policy allowed. And have they given the person sum assured and all? No. Okay, you can just give a note telling it is assumed that it is within the limits. Clear? Because if you have paid the premium more than 10% of the sum assured, the excess part is not allowed as deduction. Clear? So here it is assumed that it is within the limits. Okay. Then investment in national savings certificate, then FD for 5 years, employee contribution. This is important, you might miss it. Employer contribution we have considered as a salary rate only, whereas employee contribution you have to take care here. Okay. So total is coming to 125,370 allowed within 1,50,000 allowed. And this is following optional scheme. Please be careful. If it is default, 0 for all this. Clear? Yes. Not marks, deduction. Section 80D, medical insurance premium 22,500 allowed fully. Allowed fully. What is the age of the assessee? Doesn't matter in any way. It is less than 25 only. Okay. If it is more than 25, you have to restrict it to 25. ATG, one of the important thing here. ATG, where are you G? Yes. So donation to PM National Relief Fund, it will come under A category, full 100% deduction. Full 100% deduction. Whereas this last one will come under D category. This one will come under D category. Donation to institution approved under section 80G. How much is the donation? 11,000. How much is allowed? 50% subject to limit. Subject to limit. What is limit now? Adjusted total income. How do we calculate it? Gross total income minus all the deductions except ATG. Except ATG. So what is it, sir? Let me show you better. Gross total income minus 125,370 minus 22,500. This you don't know yet. Okay, don't deduct that also. Here it is given. Obviously, when you are doing, you don't know this figure yet. Clear? Yes. So gross total income minus all the deductions except ETG. It will come to 4,51,290. Take 10% of it, which comes to 45,129. So actual contribution or 45,129, whichever is lower, 11,000. So will 11,000 full be claimed now? No, 50% of that, which comes to 5,500 because this is D category. Only 50%. So what is the total deduction under section 80G? 10,600. 10,600. Yes. Okay, put everything in bracket actually. Whenever you are deducting something, please put it in bracket. So total income is 4,40,690. Under which scheme, Monisha? Deep. Madam, I gave deduction for all this. So you are telling default, optional. Optional. Is he eligible for rebate? Yes. 4,40,690. We are supposed to calculate tax also. Up to 2,50,000 nil. 2,50,000 to 5 lakh. But here we have to stop it at 440,691. So how much it comes to? 9,535. As the total income is within 5 lakh, assessee is eligible for a rebate. Have they mentioned about the residential status? No, but assume he is the resident. I have given few assumptions tax. If residential status of a assessee is not given in the question, assume he or she is a resident. Okay. So he is eligible for a rebate. 9,535. So tax liability comes to nil. But TDS is deducted, which you can claim it as a refund. When it is a refund, better show it as negative. Here, whatever TDS is deducted is allowed as a refund. Hope you understood. Here, yes. TDS is deducted only on interest on debenture, whereas interest on FD, no TDS. Please be careful. Okay, because it is within threshold limits. That's all. Ninth one done. We'll just finish some more time. Question number 10. From the following particulars furnished by Mr. X for the year ended 31st March 2025, you are requested to compute his total income. They are requesting Papa for year. Okay. Yes. And tax payable for the assessment year 25-26. Assuming that he opts out of default tax regime under section 115 BAC, means he is following which scheme, Monisha? Optional scheme. Remember till I complete. Again I will ask. Mr. X retired on 31st December 2024. Important. In between our previous year. at the age of 58 years, after putting in 26 years and 1 month of service from a private company at Mumbai. Guys, listen. He retired on 31st December. That means from 1st April to 31st December, he will get salary. He will get salary. Whereas from 1st January, no salary. Maybe if he's getting any pension or something, he might get it, but not salary. Clear? Yes, sir. Please be careful, especially when the retirement is during our previous year. You have to play around with the time period. You have to be careful there. Oh. He was paid a salary of 25,000 per month and outright allowance of 6,000 per month. Okay, guys, this too is for entire 12 months or only 9 months? Huh? Only for 9 months. During employment, it would be paid. From when to when? 1st April to 31st December. Last 3 months, no salary, no HRA. He paid rent 6,500 per month during his tenure of service. Guys, please be careful. HRA exemption can be claimed. But for full 12 months or 9 months? Only 9 months. We call it as relevant period. Employer is providing HRA only for 9 months. So exemption also can be claimed for 9 months. There we need to take 50% of salary and all. Okay, or 10% of salary. We need to take of how many months? 12 months or 9 months? 9 months. Please be careful. Next. On retirement, he was paid a gratuity of 3,50,000. He was covered by payment of gratuity and Mr. X had not received any other gratuity at any point of time earlier other than this gratuity. Guys, for this, he can claim exemption under section 1010. 1010 because it is received at the time of retirement. Clear? Yes. Next. He had accumulated leave of 15 days per annum during the period of his service. This was encashed by Mr. X at the time of his retirement. A sum of 3,15,000 was received by him in this regard, leave encashment. For this also exemption is available. Where? Don't know. 1010W. Okay, because leave encashment is received at the time of retirement. Okay. His average salary for the last 10 months may be taken as 24,500. They have only given. Very good. Employer allowed 30 days leave per annum. Guys, as per Income Tax Act also, for every year of completed service, the employee can take how many days leave? 30 days. The employer is also giving same. Easy for us. Easy for us. So guys, what is the leave credit? If I ask you what is the leave credit, how much is that? Hello? Leave credit. Tell me quickly. 26 into 0.5. 13 months. Correct, Andrew. How is it? Sir, he has 15 days leave for every year, which he has not taken. Clear? 15 days means 0.5 months. 0.5 months. How many years of service he has rendered? 26. So 26 into 0.5. How many months? 13 months. 13 months. Hopta idea. Is it going? Is it going? Where? To a red. Okay. Very good. After retirement, he ventured into a textile business and incurred a loss of 80,000 for the period up to 31st March 2025. Wow. Textile business loss. Can business loss be adjusted against salary income? No, it cannot be. Even though it is current year, you cannot adjust the loss under the head PGBP against salary. Oh. Mr. X has deposited 1 lakh in PPF, guys. ATC deduction. ATC deduction. So we will see the answer. Computation of total income of Mr. X. Python feeling tired? Okay, you read. Computation of total income of Mr. X for assessment year 25-26. Could you clear? He is waiting. He is holding like this. Should I drink or not? Okay. Chill. Near water. Income from salaries, basic salary only for 9 months. From 1st April to 31st December. By mistake in a hurry, you may take it for 12 months. Please be careful. Once you retire, you will not get basic salary and all. Clear? Yes. HRA again for 9 months. 54,000. HRA exemption 1013A. Least of the following is exempt. Where they have done? Here. Least of the following is exempt under section 1013A, but you have to calculate only for relevant period. What is the relevant period here? 9 months. Okay. Actual HRA received 6,000 into 9 because after retirement, all this will not be paid, guys. 54,000. Rent paid in excess of 10% of salary. 10% of salary. Salary means how much here? Only basic pay. That's all. Only basic pay. 2,25,000. Okay. Rent paid is how much, guys? Rent paid is how much? 6,500. 6,500 per month. So 6,500 into 9 minus 2 lakh 25,000 into 10%. 2 lakh 25,000 into 10% you do. How much you will get? Are you getting same 36,000? Yes. Okay, they have not shown the working year, but you better show it. Okay, what they have done is 6,500. Okay, then whatever is the monthly salary, na, they have taken 10% of it. 25,000 into 10%, 2,500. Okay, now this is like per month calculation into 9 months. See, guys, assessee might stay in a rent house and pay rent for full 12 months, but HRA is received only for 9 months. So here rent paid, while calculating the exemption, we need to take only for 9 months, not for full 12 months. Please be careful. So 50% of salary, yake sir, why sir? Part of CDMK. Where is he staying in a rented house? Mumbai. Mumbai. He is staying in Mumbai. Obviously, house also will be given in Mumbai. Correct? Part of CDMK. Chennai, Delhi, Mumbai, Kolkata. If it is Mumbai, how much? 50% of salary. If it is other than CDMK, 40%. Yes, sir. So least of the following, 36,000. Least of the following is 36,000. Okay, sir. Gratuity. Now coming to gratuity. Actual amount received 3 lakh 50. Exemption is available under section 1010. How much is that, sir? Gratuity of 3 lakh 50 is exempt under section 1010 for the least of the following. How much is that? Actual gratuity received 3 lakh 50. Half month salary for each completed year, which is nothing but only you have to take basic pay year. Okay, 25,000 into 15 by 26 into 26 year. Ignore the months. Ignore the months. See, month has to be rounded up only if it is more than 6 months. It is year, I guess, only 1 month. So ignore. So it comes to 375. Statutory limit is 20. Whichever is lower, 350. Full amount is 6. Full amount is exempt. Hope you guys can connect. Just a minute, I will show you for gratuity. This is the table for gratuity. You can see for government employee 100% exempt received at the time of retirement. For non-government employee not covered under gratuity, covered under gratuity. Here this guy is covered under gratuity act. How much is exempt, sir? You can see here. Actual gratuity received statutory limit of 20 lakh or 15 by 26 into last drawn salary. Last drawn salary is before retirement, which was 25,000. Okay. Into number of years of completed, you need to round off if it is more than 6 months. Means you have to take the next year. But here it was only 1 month, so it. And here salary means what? Basic pay plus DA. For DA, no condition. But for this question, DA was not at all there. So we are taking only basic pay as last drawn salary. Yes, sir. Next, leave encashment also I will show. List of the following is exempt under section 1010 WS. 1010 W. What is it, sir? Actual leave encashment received, which is 3,15,000. Then 10 months average salary, that is 10 months into average salary of last 10 months before retirement, which is already given in the question. Multiply 2,45. Then you need to take leave credit into the average salary of last 10 months, 24,500. Leave credit, how to calculate it, sir? I already shown 13 months. Correct, 13 months. But here they have done it in a different way. Days they have done. Leave entitlement of Mr. X on the basis of 30 days for every year of actual service rendered by him to the employer. As for IT Act, also 30 days only. So, what is the total leave eligible for him? 780 days. So, he has a leave credit of 15 days, means he has taken how much? 15 days. So, leave taken reduce 390. For each year, he has taken 15 days leave. So, what is the leave credit? 390 days. So, they have taken that. 24,500 is per month, no? Divided by 30 into number of days. Instead of that, better convert this only per days. Easy, I told you guys. He has 15 days leave credit for each year of service. How many years of service he has rendered? 26. So 26 into 0.5 months. What is the leave credit? 13 months. 13 months into 24,500. you get seen. So simple, it's 26 into 0.5. How did we get 0.5? Half of the month into 24,500. You'll get same actually. You'll get same. This is actually more simple. Okay, na? Yes. The year, please be careful. Leave eligible as per employer, as per income tax act is same, 30 days. Okay? Yes. So it comes to 3,18,500. Statutory limit is 25 lakh. Whichever is lower is 245. 2,45,000. Yes. So leave encashment received is 3,15,000. Exempt is 245. Remaining is 70,000. Remaining is 70,000 taxable under salary head. So gross salary is 3,13,000. Assessee is following optional scheme. So standard deduction is only 50. So what is the taxable salary? 2,63,000. Then he also has a business loss of 80,000, which you can simply carry forward. You can simply carry forward because business loss cannot be adjusted against salary income loss, even though it is current year business loss. So you will get gross total income 263. There is a deduction for PPF contribution under section 80C, 1 lakh. Reduce it. Total income is 163, which is less than basic essential limit. So no tax. So no tax. Got it? Yes. This looks like simple, but we have to do all this no. Reflecting all this gratuity, leave encashment, all this adjustment, the list of the following is exempt. Plus, even this one is one of the squish business laws they have given. Actually, it doesn't have any effect to our answer. But still, some students might adjust it against salary income by mistake, thinking that it is a current year business loss, adjust madi. Clear? So small things we need to take care. Please practice all these questions once. Okay, take up only the questions, try to answer. You cross check your answer with ICAI answer. Okay, whatever we discussed now. Okay, is it matching? If not, where is the correction to be made? Okay, done no? 10th one done. I guess this is the last question, huh? 11th one. Or 12 is also there. Two more questions. We're almost done. We'll finish. Okay. Rahul, getting stress? Tension illa. Aram. Chal. Rosie and Mary are sisters. Okay, they both are sisters. Born and brought up at Mumbai. Okay, part of India only. Rosie got married in 1982. What, Nitin? You can sit there only. You want air, no? Go a little closer to window. But see me only. Don't peep out of the window. Rosie got married in 1982 and settled at Canada since 1982. Okay. Mary, not Mary. Mary got married. Mary got married and settled in Mumbai. Okay, she is in Mumbai only. Both of them are below 60 years. The following are the details of their income for previous year ended 31st March 2025. Okay, so let us mark better. She is our resident, Mary, Rosie, non-resident. Clear? She is settled there only. Where? In Canada. Okay. Pension received from state government, taxable under salary head. Pension received from Canadian government, 20,000. Okay. She is non-resident. Received there means obviously not taxable. Long-term capital gain on sale of land on 15th May 2024, before 23rd July. Before 23rd July. At Mumbai, taxable how much? 1 lakh, 1 lakh. Taxable for both. Short-term capital gain on sale of shares on 23rd April of Indian listed companies in respect of which STT was paid again before 23rd July. Old rate is still. Okay. So as it is the shares of Indian listed company taxable for both. LIC premium paid, ATC deduction. Premium paid to Canadian Life Insurance Corporation at Canada. Sir, is it allowed as deduction under section ATC in India? Yes. ATC deduction for this solves. Mediclaim policy premium paid by account pay check, 80D deduction less. Deposit in PPF, 80C deduction again. Rent received in respect of house property at Mumbai, taxable under head house property. Okay, when question is silent, take this only as GAB. Take this only as GAB, stands for gross annual value. Compute the total income and tax liability of Rosie and Mary for assessment year 24-25 and tax thereon. Okay, they are asking tax also. Assuming both exercise the option to shift out of default tax regime. Means they are following optional scheme, guys. Yes. First, let us finish one at a time. Better. Okay. For Rosie, non-resident. She is a non-resident. Sir, number of days and all is not given. Straight away concluded. Okay, she is settled in Canada forever. Okay, after her marriage. Yeah, so obviously she is a non-resident. Oh. Pension received from state government. Okay, that is for actually married. We'll come to that later. Income from house property, 60,000 is there, which is we are taking it as GAV. Then only 30% standard deduction. Question is silent about municipal tax paid, interest. So ignore both. Take only 30% of NAV as deduction. And for this question, GAV will be NAV. 30% give the deduction. Okay, fine, sir. Next, capital gains. Both are okay. Let us quickly analyze both actually together. Okay, chalo. Mary is an ordinary resident. Why, sir? She is settled in India itself. So whatever pension she is receiving, is it taxable? Yes. So 60,000 and she is following optional scheme. So 50,000 standard deduction you give. Remaining 10,000 is taxable. Sir, what about Rosie? She is also getting pension from the Canadian government, I guess. Yes. As she is a non-resident, income received and earned outside India is not taxable. Is not taxable. So this is not taxable. Okay. Whereas gains are taxable, guys, because the assets are in India. As per section 9, when the capital asset or property is in India, any income which is earned from it is deemed to accrue or arise in India, including house rental. Including rental. Okay. So rental income, we will consider it. Then capital gains. Long-term capital gain on the sale of land at Mumbai. Indian income, taxable for both. Then short-term capital gain on the sale of shares of Indian listed companies in respect of which STT was paid, taxable for both. So capital gains is this much. Gross total income, they've added all three. Salary, house property plus capital gains. No PGPP and all. 162 and 381. Deductions tax. For LIC premium paid, she can claim deduction. For premium paid to Canadian Life Insurance Corporation, is deduction allowed? Yes, in India allowed. Deposit in PPF, deduction allowed. ATC. Okay. Then medical insurance premium paid, ATD deduction, 25. Better put it all this in brackets, guys. Okay, sir. So total deduction is 40 and 31. Important. Listen here. One twist is there. Guys, chapter 6A deductions cannot be claimed against special incomes. Chapter 6A deductions cannot be claimed against special incomes. Special incomes means capital gain special income or casual income. Clear? Yes. Listen here. Now, total deductions is coming to how much, guys? 40 and 55. 40 and 55. We will go one at a time. For this girl, 40,000. Now check whether other income is more than 40,000. Sir, house property, how much? 42. Can she claim full? Yes. Because against this, guys, she cannot claim deductions. So your other income or normal income itself is more than 40. Can she claim fully? Yes. So full 40 we are allowing. Full 40 we are allowing. Okay, good. Now coming to this girl who is a non-resident. How much is the total deduction? Sorry, this girl is, I guess, ordinary resident. Yes, this girl is ordinary resident. Yes. So what is the total deduction she is eligible for? 55. Check what is the normal income. 10,000 plus 21,000. Only 31,000. Whereas she cannot claim deductions against this. So even though she is eligible for 55, it is restricted to 31, which is nothing but normal income. Which is nothing but normal income. Guys, please be careful. Whenever your gross total income includes any special income, you have to restrict the total deductions for normal income. Or else gross total income minus special incomes. Clear? Yes. So this is important. If you want, you can mark a star there. Clear? So this 31,000 is nothing but our salary income and house property income. Whereas capital gains income, she cannot claim. Chapter 6A, deductions. One of the important adjustments. Okay, sir. So now total income comes to 122, 350. 122, 350. First we will do it for non-resident. Look now. Sir, 122. In that, how much is normal income? I guess. So out of 42, already 40,000 deduction is claimed. That means only 2,000 is normal income. Remaining is special income. Correct? Special income is this one. 120. Clear? Let's listen here. When your normal income is less than basic exemption limit. When your normal income is less than basic exemption limit. you will get the shortfall or the unexhausted basic exemption limit. Can it be adjusted against capital gain special income? Yes, only for resident individual and HGF. Whereas this girl is non-resident. Can she adjust? No. So that means straight away full 120 is taxable. Straight away full 120 is taxable. So how much is that? On 1 lakh, 20%, the old rate, because the transfer happened before 23rd July. And on 20,000, 15%, old rate year also. Clear? So 23,000. Whereas on 2,000, no tax because it is less than basic exemption limit, guys. Please be careful for non-resident. You cannot adjust unexhausted basic exemption limit against capital gains special income. So 23,000. Is she eligible for any rebate? No, because she is a non-resident. So she has to pay 23,000 plus says 920. So 23,920. Clear? Yes, sir. So they have given us some notes. Let us quickly read it. Long-term capital gain on the sale of land on 15th May 2024, which is before 23rd July, before the new rate was introduced, is taxable at 20%. And as it is a land, where is it covered? 112. Clear? Yes. Then short-term capital gain on the transfer of equity shares on 23rd April, in respect of which securities transaction tax is paid, is subject to 15% tax under section 11A. For this also old rate. Yes. Yes. See, no rebate for non-resident. Even though the total income is less than 5 lakh, no rebate for her. Why, sir? Because she is a non-resident. Even that adjusting the shortfall against the capital gains is not available for her, guys. So she has to pay 23,920 tax in India. Now coming to the other girl who is resident. What is the total income? 350. In that, I guess entire income is special only. Correct? Huh? Entire 350 is special only. Entire 350 is special. Guys, come on. 1 lakh is taxable at 20%. 2 lakh 50 is taxable at 15%. So what is the shortfall here? Entire 250 is shortfall. Correct. Entire 2 lakh 50 is shortfall because there is no other income at all. Clear? 250 minus 0 is 250. So shortfall is 250. Against which one will you adjust first? Against 1 lakh first because that is taxable at highest rate. Remaining 150 you will adjust again to. So after adjusting 150, how much is remaining? 1 lakh, which is taxable at 15%. Clear? Note is given. Let me read it. In case of resident individual, if basic exemption limit is not fully exhausted against other income, then long-term capital gains under section 112 or short-term capital gains under section 111A will be reduced by unexhausted basic exemption limit, and only the balance will be taxed at 20 or 15%. However, this benefit is not available to non-residents, only for residents. Therefore, while Mary can adjust unexhausted basic exemption limit against long-term as well as short-term capital gain special incomes, Rosie cannot do it because she is a non-resident. Since long-term capital gain is taxable at 20% and short-term capital gain under section 111A is taxable at 15%, it is more beneficial for Mary to first exhaust the basic exemption limit against what? The long-term gain. First adjust against long-term gain. Remaining you adjust it against short-term gain. Clear? So what is the unexhausted basic exemption limit, guys? 2,50,000. Entire basic exemption limit. First you will adjust it against long-term gain of 1 lakh. Remaining shortfall is how much? 150. Adjust it against short-term gain. What is the total short-term gain? 2,50,000. You adjusted 150. Remaining is how much? 1 lakh. It is taxable at 15%. Hope you are getting it. You can see tax on short-term capital gain at 15% for 1 lakh. How did we get 1 lakh? Hope you are understanding. What is the total shortfall, guys? 250. First, you will adjust 250 against what? 1 lakh against long term. Remaining is how much? 150. So 150 you will adjust here. Remaining is how much? 1 lakh. 1 lakh is taxable at what rate? 15%. 15%. Yes. So 1 lakh into 15%, tax comes to 15,000. So what is her gross tax liability? 15,000. As she is the resident, can she claim a rebate? Yes. How much is the total income? Within 5 lakh. Is she eligible for a rebate? Yes. Under optional scheme. Actual tax liability or 12,500, whichever is lower under option. Correct, no, Bhavya? 12,500 or gross tax liability, whichever is lower. So 15,000 or 12,500, whichever is lower, 12,500. Remaining is how much? 2,500 plus 4% cess. Pay that much. Pay that much. Guys, you will assume that, sir, it is less than 5 lakh, no, so zero tax anta. No, here it is special gain. Clear? So tax might come even after rebate. Please be careful because under optional scheme, maximum rebate is 12,500. Yeah, yes. If by chance, if he has only normal income, then if he has income up to 5 lakh, then no tax. Why is that? Because 2 lakh 50 will be taxable at 5%. 5% of 2 lakh 50 comes to 12,500, which is equal to rebate. Clear? But here it was not a normal income, special income taxability. Special. Clear? Yes. Tricky question, guys. Tricky question. Actually interesting. Please go through it again, once again later. Okay? Yes. So last question. Last question. Mr. X, an individual set up a unit in SEZ, Special Economic Zone, in the financial year 1920. We are in which year, guys? 24-25. It was set up in 1920 for production of washing machine. Guys, listen here. For a unit in SEZ, whatever they earn from exports is allowed as deduction under section 10AA for 15 years. First check, our previous year is in which year? 1920 is the first year. 2021, 21-22, 22-23, 24-25. I repeat. Business is started in 1920. First year, 1920, 2021, 21-22, 22-23, 23-24. Fifth, 5 years. Correct? So that means we are in the sixth year. Sixth year. For sixth year, how much is allowed as deduction? 50% of eligible profit. For first 5 year, 100%. Whereas for next 5 years, that is from 6th to 10th, it is 50% of eligible profit. Eligible profit is nothing but export profit. Okay, sir. The unit fulfills all the conditions of section 10AA of Income Tax Act 1961. During the financial year 23-24, he has also set up a warehousing facility, that is last year, in the district of Tamil Nadu for storage of agricultural produce. It fulfills all the conditions of section 3580, specified business. Capital expenditure in respect of warehouse amounted to 75 lakh, including cost of land. I see. For specified business, whatever capital expenditure is incurred is allowed as deduction in the year in which it is incurred. So what if it is incurred before the commencement of business? Then it will be allowed in the year in which business is commenced. Clear? But except LGM. Except LGM. That is land, goodwill and financial instrument, no deduction. Here, goodwill is, land is 10,000. 10 lakh. So 75 minus 10, 65 lakh is allowed as deduction under section 3580, guys. Under the head PGPP only. The warehouse become operational with effect from 1st April 2024. That is our previous year. So if there is any capital expenditure incurred in the before commencement of business, when is it allowed? In the year in which the business is commenced. So actually it was incurred last year, but when did the business commence? In the previous year. So can we claim it in the previous year? Yes. And expenditure of 75 lakhs was capitalized in the books on that day. That means we can claim it. Relevant details for the financial year 24-25 are as follows. Profit of unit located in SEZ 40 lakh. This is total profit is in SEZ. Export turnover received in India in convertible foreign exchange on or before 30th September is 80 lakh. Domestic sales of the above unit is 20 lakh. Both put together, total sales is how much? 1 crore. How can we calculate eligible profit? 40 lakh divided by 1 crore into 80 lakh. That is nothing but profit attributable to export business. Is fully allowed as deduction? No, 50% of 50% of it, guys. Profit from operation of warehousing facility before consideration deduction under section 3580 means profit in the first year only they have made 1 crore 5 lakh. Great. Compute income tax including alternate minimum tax under section 115 JAC. Guys, why? Because when assessee is claiming 3580 deduction and 10AA deduction, AMT is applicable under optional scheme. Under optional scheme. Okay. Compute income tax including AMT under section 115 JC. Liability of Mr. X for assessment year 25-26, both as per section 115 BAC and as per regular provisions of Income Tax Act 1961 for assessment year 25-26. Advise Mr. X whether he should pay tax under default tax regime or normal provisions of the. Oh, let us come to the answer. First, we are doing under default tax regime. Guys, when assessee is following default regime, no deduction under 10AA, no capital expenditure deduction under 3580, and no AMT also. No AMT also. Please be careful with all this. Profits and gains of business or profession, 40 lakh. That is unit in SEZ. Then profit from operation of warehousing facility, 1 crore, 5 lakh. And as deduction is not allowed for capital expenditure, you can claim depreciation for it. Clear? 3580 deduction is not allowed if the assessee is following default regime, specified business capital expenditure. Can they claim depreciation? Yes. How much? Guys, 75 lakh is the total capital expenditure. In that 10 lakh is on land. On land, no depreciation is allowed. Remaining 65 lakh is considered to be building. Okay, they have given a note also for that. Yes. Assuming the capital expenditure of 65 lakh is incurred towards building. Remaining 10 lakh was the land. Warehouse facility, now it is understood here. The remaining is for building, guys. Yes. So on building, what is the depreciation rate? 10%. So 65 lakh into 10%, which comes to 6 lakh 50. Reduce it. Remaining is the income from specified business. Income from specified business. Please be careful. 3580 deduction is blocked under default regime. Then, sir, what about 10AA deduction? Even that is wrong. Oh, total income is 1 crore 38 lakh 50,000. So compute tax. Tax on 1 crore 38 lakh 50,000. They have applied the slab rates and they have done it. Okay, you can try it out and see whether it is right or wrong. It is right. Okay, don't worry. Okay, but still you can cross check it. Slab rates is applied because who is the assessee? Individually. So slab rates, that is up to 3 lakh nil and all, they have applied. Okay, sir. Surcharge, as the total income is more than 1 crore, surcharge is at 15% applied. Add up both, you will get 44 lakh 21,750, 4% cess. Final tax to be paid under default regime is 45 lakh 98,620. Notes. Deductions under section 10AA and 3580 are not allowable as per section 115 BAs. However, normal depreciation will be allowed. As 3580 capital expenditure deduction is not allowed, you can claim depreciation under section 32. Mr. X is not eligible to alternate minimum tax under section 115 JC under default tax regime under section 115 BAC. Guys, when is AMT applicable is if you claim these deductions. Clear? That is when AMT is applicable. Under default regime, both of them are blocked. No AMT also. No AMT also. Oh. Now coming to optional regime. Guys, important. Please pay attention. Regular provisions are optional regime. PGBP first. Profit from unit in SEZ, 40 lakh. Guys, they have shown the deduction here itself, but in my opinion, it is wrong because deduction under section 10AA is against gross total income. Is against gross total income. So they should have calculated gross total income and from there they would have reduced 10AA deduction. Amount is same, but the way they have presented is wrong. Yeah. So what is the deduction under 10AA? Where is it? Here. Okay. Profit of SEZ unit is 40 lakhs. Into how much is attributable for export business you calculate. Divided by 1 crore. Total sales. Into export sales, 80 lakh. And as we are in the 6th year, 50%. As we are in the 6th year, 50% of it, which comes to 16 lakh. Is that clear? So what is my suggestion is, guys, you include entire 40 lakh under the PGBP. Don't give deduction here. Calculate gross total income. From gross total income, reduce 16 lakh. That is the right way actually. Clear? Yes. Anyway, they have reduced it here. So net income is 24 lakh. Next coming to warehousing facility business. 1 crore 5 lakh is the total income. Okay, that is business income. From that 3580 capital expenditure deduction. Can we claim full? Except land. Except land. 65 lakh. We are claiming it. Remaining is 40 lakh. Sir, can we claim this under the 8 PGBP itself? Yes. This is allowed under the head PGPP itself, but this is not under the head PGPP. This is against gross total income. So if you ask me what should we actually do, sir, you take 40 lakh plus 40 lakh, 80 lakh as your gross total income. From gross total income, you have to reduce this 16 lakhs, where you will get total income same figure. Total income would be 64 lakhs. This is that clear? Because 10 AA deduction is against gross total income, not under the head PGPP. Okay, sir. Total income we got 64 lakh. Compute tax. Apply slab rates on 64 lakh and calculate tax. Entire income is normal income. Apply slab rates. You will get 17 lakh 32,500. Slab rates, you know, na, same thing. Here they are actually not shown, but in your exam you have to show. You cannot write like directly like this. Please show it. Okay, maybe either at least as a working you show. Okay. As total income is more than 50 lakh, surcharge is applicable at 10%. No need to check the relief and all here, guys. It will not be applicable. So also add 4% says you will get total tax liability 19 lakh 81,980. This is as per normal provisions. But is the AMT applicable? Yes. As the assessee is other than company. For company, MAT is applicable. Okay, which is not a part of your intermediate syllabus. Yes. For any assessee other than company, if they have claimed a deduction under section 35 AD or 10 AA, then for them AMT is applicable. Let us apply. Total income as per normal provisions, guys. Whatever we have calculated, we need to take that only as a base. We need to take that as a base, 64 lakh. Okay, sir. Add back the deductions. 10 AA deduction, 16 lakh add back. Then 3580 deduction you have to add back, but after reducing depreciation. Because if this is not allowed, at least depreciation assessee can claim, na? Yes. So on 65 lakh, if depreciation would have been claimed, how much he would have claimed? 10% reduce. Reduce that much. So 65 lakh into 10%. Why 10%? Because it is the building. Clear? Reduce 6 lakh 50,000. Remaining you add. Remaining you add back. Hope you got it. Clear? Yes, sir. So adjusted total income is 1 crore 38 lakh 50,000. On this, the tax rate is always 18.5%. Clear? Sir, should we add a surcharge? Yes. As adjusted total income is more than 1 crore, surcharge is at the rate of 15%. Clear? And when you are doing this calculation, assume adjusted total income itself is as total income. If total income is more than 1 crore up to 2 crore, what is the surcharge rate? 15%. Apply that. Apply that. 15% on what, sir? 25 lakh 62 250. And also add 4% says you will get 30 lakh 64 451. Round it up to 450. Should assessee pay both? No, whichever is here. Whichever is higher. This one or this one. Whichever is higher. AMT only is more. So he has to pay this much. He has to pay this much. Assessee has to pay 30 lakh 64,450, but he will get a AMT credit of the difference. That is whatever is the difference between this and this, he will get it as AMT credit. What does he do with this AMT credit? Whenever tax as per normal provision is more than AMT, he can adjust that credit to the extent of difference. But please make sure that even after adjusting the credit, whatever you finally pay to the government can never be less than AMT. Can never be less than AMT, guys. So maximum credit you can utilize it is whatever credit you have or the difference between the tax as per normal provision and AMT. Yeah. Sir, what if in the next year also AMT is only more? You need to pay that. Okay, again you will get a credit. And this credit you can carry forward for next 15 years. Next 15 years and adjust it when tax as per normal provision is more than AMT. Yes, sir. You can see we are also giving the conclusion. Since the regular income tax payable is less than alternate minimum tax payable, the adjusted total income shall be deemed to be the total income and tax is leviable at 18.5% thereof plus surcharge 15% and cess 4%. Therefore, the tax liability of the assessee under optional scheme would be 30 lakh 64,450. So under optional regime is this much. Under default regime is how much, guys? 45 lakh 98, which is beneficial, optional. Which is beneficial, optional, and moreover, you will get credit also, AMT credit. So, which is more beneficial? Optional. Since tax liability of Mr. X under section 115 JC is lower than the tax liability as computed under section 115 BAC, it would be beneficial for him to opt out of default tax regime under section 115 BAC for assessment year 25-26. Moreover, benefit of alternate minimum tax credit is also available under the optional scheme. How much is that credit, sir? AMT credit 10,82,470. You can call this as AMT credit. Clear? Tax also is lower, plus you will also get a credit. But one more thing, guys, you have to be careful. For this question may not be relevant, they have not asked. But when associate, when associate have the income under the head PGBP, if he is opting out of optional and following default, he is opting out of default and following optional. Once again, he can come back to default, but can never go back to optional again. You know, na? That is when the assessee is having the income under the head PGBP. Here he has income under the head PGBP. Please be careful. Now, can he go from default to optional? Yes, sir, no problem. By chance, if they had already given in the question, he has already gone once in the past and gone back to default again. Means in the past, he has moved from default to optional. Now he has again come to default. Now again, can he go to optional? Again. Say thank you. That's all. Clear? Huh? Yes. Chalo. So here, second note is with respect to 10 AA. Deduction at under, no, 35A. This is actually on 35A. 35A. 10 AA first note only. Oh, what is it? We will quickly read it. Deduction at 100% of capital expenditure is available under section 35 AD for assessment year 25-26. In respect of specified business of setting up and operating of warehousing facility for storage of agricultural produce. Is it a specified business? Yes. Which commences the operation on or after 1st April 2009. Further, the expenditure incurred only and exclusively for the purposes of such specified business shall be allowed as deduction during the previous year in which he commences the operation of his specified business if the expenditure is incurred prior to the commencement of its operation. And the amount is capitalized in the books of accounts of the assessee on the date of commencement of its operations. Clear? Except land. Except land. Okay. Deduction under section 35 AD would, however, not be available on the expenditure incurred on acquisition of land. So that means how much deduction he can claim? 75 minus 10. He can claim 65 lakh. Even though it was incurred last year, business is commenced in the current year. So it can be claimed in the year in which commencement of business has happened. Is that clear? Yes, guys. So this is all the questions on computation of total income and tax liability from ICAI metric. Few of the questions were really interesting, guys. See, now as I have explained and solution was there, you would have felt it as easy. But I want you guys to try out all this question independently. Especially the full-fledged question, wherever lengthy questions are there, please try to take up that and solve it. And when you are solving, please give working notes, everything as if you are writing the exams. Because some students will do only number calculation. 50 plus 20 plus that 2 plus this. Answer we got matching. Correct answer. But in the exam, you cannot do that. So please be careful. Everything you need to write, please practice it as much as possible. And also be aware of the time what you are taking. Okay, time management also for total income question is very, very important. Fine? Yes. So this is all about this class.